the ticker parade. When I was a young kid, my mentor pulled me close, said, watch this bid. He flicked his wrist, the market roared. 1,000 bulls broke through the floor. Cha-ching, ring the bell. He said, kid, one day when I'm gone, you'll chase the chart till the break of dawn. The candles dance, the shorts will fade. Join the wild, unholy trade. Buy, sell, panic, play. We're born to trade another day. Sometimes I'm feeling bullish. Feeling bullish. Other days I'm straight demolished. He's demolished. My margins calling, brokers stalling, charts collapsing, profits falling. Oh dear Lord, I'm red again. Red again. Guess I'll average down my sin. Average it down. But when the fear begins to bite, I double down and hold the line tonight. Raise those stops, the lost parade is near. My eyes are bloodshot, yet I cheer. For every crash, a phoenix giant will rise. I'm caffeinated, hoping a suit and tie. We'll carry on, though my funds are gone. Believe me, my leverage will carry on. We'll carry on, with a coffee vibe, dripping broken bonds. The market's burn, the traders scream, but I'm still hedging in my dream. We'll carry on. He's delirious. We'll carry on. Ladies and gents, your boy has been margin called again. But did I panic? Yes! Did I sell? No! Did I cry in the shower to see NBC? Maybe a little. I'm just a humble retail knight, armed with memes and candlelight. The haters mock, but I don't flee because the market still believes in me. We'll carry on, though my cash is gone. Believe me, my madness will carry on. We'll carry on. My brokers weeping softly on the
Oh, brother, oh, brother, oh, brother. Welcome back to another episode of the Matt Kohrs Show. I guess we're simultaneously the best and the worst day trading live show ever to meet mankind. I'm so happy you guys are here early in this morning, jamming out, listening to some good tunes. No one does it at this level. Day in and day out, the Goonie community proves why we are numero uno. In your hearts, in my hearts, in everyone's hearts, everyone is jealous of us. We are the in crowd. Damn, nice shirt. Yeah, thanks. We're switching it up. You guys gave me a lot of shit for the other flannel, so here we are. I feel like it's kind of a desert vibe, you know? It feels like right after this, they'd be like, is that guy a tour guide in the Mojave Desert? Like, I feel like I should stand there. It's like a professional. I feel like I could just kind of hang out. You know, it's a desert tour guide type of a vibe. It feels like I would sell turquoise jewelry in Arizona. Like, you guys, this is my character in Scottsdale when I'm selling local jewelry at a farmer's market, you know? You did wear it 5 days ago. No, I haven't worn this in a while. The last time I wore this shirt was probably a whole year ago. Is that tweed? I don't even know what tweed means, but I do know. Hang on. We have a surprise guest this morning. Mrs. Piper, what are you up to? You want to say anything to the crowd? Do you have any commentary on the market bouncing back? Do you have any commentary on Trump messing up everyone's zero DTE positions? Do you want to say anything? You want to say anything today? She's not feeling it. She's not feeling it in the slightest. All right, we'll do it. We'll do it like this. Well, anyway, folks, we're back at it again. It is a Wednesday. It is October the 15th. It is a hump day, and we are currently set to open above yesterday's high, which is kind of crazy if you paid attention to what happened halfway through Power Hour yesterday, where we completely dumped. But obviously, we're in this this headline news environment where we're just, at any given moment, you might be just dropping 50 points. It's one of those situations. I guess halfway through the day, we could just randomly get a Kobe Bryant moment where 50 points gets dropped on us. So I guess it just is what it is. So we got to get used to it. But anyway, I'm excited. Yes, obviously it is a gap up, so you have to be mindful of the downside gap fill. I am bullish, so I would actually kind of prefer there to be no gap, or if there is a little bit of a gap, I want it to be filled on minute one, then buyer step in and we just rip from there. That would make me feel a whole heck of a lot better about my life, but obviously wish in one hand and shit in the other and see which one fills up faster, because there's no crying in the casino. So we're going to be breaking down kind of what happened yesterday, just in case you missed that update video. But here's the TLDR. Trump popped off about cooking oil at 3:30 p.m. ET. Market dumped overnight. Everyone said, why are we freaking out about cooking oil? Market is now bouncing back. So on top of just people calming down in the overnight session, we are also getting some good earnings out of the likes of Bank of America, out of Morgan Stanley, and out of ASML. We are back in earnings season. Unfortunately, there's no major news today because the government shut down, so we're not getting CPI, PPI, we're not getting initial jobless claims tomorrow, we're not getting non-farm payrolls on Friday, and as of now, it is anticipated from both Polymarket and Kohrs that we will be having the government shutdown last into the month of November. So that basically means that the Fed is most likely going to have to make the FOMC decision on October 29th, 2 Wednesdays from now. Well, it depends if you count today or not. Basically 2 weeks from now, with no real information. And as of now, it does seem as if we're getting a 25 bips rate cut, but that's not why everyone got so jacked up yesterday. If you missed it, Jerome Powell did have a speech. He was getting the Adam something award. I want to say Adam Smith. I think he was getting the Adam Smith award, which is basically, I don't know, it sounds kind of like a circle jerk around economists. I don't know what it's about. But anyway, it's apparently some fancy schmancy award. And anyway, in that ceremony yesterday, he made strong inklings, if you will, that we might stop quantitative tightening soon. I know we haven't talked about QT lately. I know we've talked about you being a QT, but we haven't talked about QT, the letters. We haven't talked about quantitative tightening in a hot minute, and it seems like we might be coming to an end of that, which obviously, as you could see from the midday action, the market really liked it. It also helped that the U.S. trade rep, Greer, said somewhat of positive stuff midday yesterday as well. So the two positive things of the day yesterday were the U.S. trade rep, Greer, saying that, yeah, U.S. and China, we'll figure it out. They're going to talk. Oh, hang on. We have movement. We have movement. Do you want to switch? I can put you in this arm. Oh, stop it. Stop it. Hey, stop. What? You're the one freaking out. You're the one who wanted to go to the... No, uh-oh. We have an aggressive cat on our hands. She has claws up. You can't see it, but the claws up. She's ready to strike. Hang on one second. She's feisty today. She's feisty on Wednesdays. Where was I? Trade Greer, U.S. China, everyone basically freaking out saying, hey, it's actually going to be fine. And they're going to talk President Trump and Xi. They do have allegedly a scheduled chat in South Korea. So that was good. Then it led into Powell saying, hey, actually, we might end quantitative tightening. Dude, she just sprinted out of here. What's this girl doing? And then from there, so those were good. And then all of a sudden, the bad thing was the cooking oil thing. So that was pretty much the headlines of yesterday, leading us into the overnight session where people bought the dip. And now things are looking decently strong. And it looks as if today the battle is going to be 6700. That is the line in the sand today. 6700. Can the bull camp get the overall market above and sustainably hold 6,700? If so, that's a big win. As long as we remain below it, I would argue in the short term, the bears have a fighting chance. So that's going to be a major pivot level, at least in my mind. Maybe you agree, maybe you don't agree, but we could already see that the market is setting up to play that level. And there is currently a call credit spread at 6,705. So I will be calling that out. So just wanted everyone to know kind of where we're at. We're getting all on the same page, and let me rip through what in the world is going on. All right, where we Dow futures jump 200 points as strong earnings overshadow the China trade fights. Bank of America rises. So that is obviously the headline. And yes, we will be getting into Bank of America, Morgan Stanley, and ASML. But I do want to let you know that we just had a little bit of Treasury Secretary breaking news. He said that the stock market decline won't deter the U.S. from taking strong action against China. I don't know what vibe this guy has going on lately, because even when things got bad with China 2 nights ago, when China just vaguely said, we will fight till the end, he then went on and did an interview with the Financial Times and basically said, China's trying to drag everyone down with it. So I don't know who pissed in his tea, but he has not been saying what I would perceive as anything bullish recently. He seems angry. He seems like a negative Nancy. So I don't know what's going on with Bissent, but he's basically making a case that, hey, no, we will keep fighting with China. So anyway, that's a little bit of breaking news as of this morning. And it's not really deterring the market too much. As you could see, we got hit going into close yesterday. Overnight session was fine. And then really early this morning, like right now, we actually are set up where we have a downside gap fill. We are above the high value from yesterday in both the SPY and the Qs. And obviously you could see in pre-market trading, the market loving Bank of America's earnings, loving ASML's earnings. So Trump threatens retaliation for China's soy boycott. So right here, this came out at 3:37. We were all having a great day yesterday until we weren't. And it basically related to soybeans, soybean farmers, and basically saying that this is an economically hostile act and we're not happy about cooking oil. So that was right at the end of the day, and that's why we had a bit of a sell-off. Trump threatens China with cooking oil embargo over soybean snub. So that's the headline. And when you have so much zero DT trading, especially in a negative gamma environment, that's why you can easily drop 50 points because it very rapidly becomes a negative feedback loop. There's a little bit of a bot reaction. They sell off. People with zero DT calls panic, so they decide to sell. It goes down further. And then people who are a little bit later to react, they end up selling. And you just, like I said, it's a very rapid negative feedback loop. But here's what Bloomberg had to say on the matter.
Well, the S&P 500 turned lower in the final hour of the trade after, you guessed it, a flare-up in the trade war with China. President Trump threatening to stop trade in cooking oil with China in a Truth Social post, a retaliatory move after Beijing is continuing to refuse to buy American soybeans. Joining us now is Balance of Power co-host Joe Matthews. So, Joe, it feels like a little bit we're back in an environment where there's so much headline ping pong when it comes to what is the state of play with trade negotiations with China.
Yeah, it's been kind of a day-to-day up and down here, with the president being accused of pulling another taco over the weekend following his very aggressive post on Truth Social on Friday, sent the markets in a tizzy, then the relief rally yesterday. And yes, today, I'm guessing you didn't have cooking oil on the menu for the program, but that's what the president's talking about on Truth Social. And this post helped to send the markets lower. With China not buying soybeans, we know that's been the case now for some time. He calls it an economically hostile act. He says China purposefully not buying the crop. And we're considering terminating business, he says on Truth Social, with China having to do with cooking oil and other elements of trade as retribution. He says we can easily make our own cooking oil. And it's unclear if he's talking about the new stuff that we buy at the store and cook in ourselves, or the massive imports of used cooking oil from China that goes back to, as a matter of fact, the Inflation Reduction Act, a Biden-era piece of legislation, now law, the IRA, that in fact created incentives for renewable fuels like, yes, used cooking oil. Now, guys, I don't know if this is going to be the path to a deal with China. The president is supposed to sit down with Xi Jinping in just a couple of weeks at the APEC summit in Korea. The administration, by way of the Treasury Secretary, is still saying that that meeting is on. And we heard from USTR Greer today saying they even have a time We haven't seen that publicly, but they have a time to meet, and that has not changed yet.
All right, so that's the framework of really coming in today. And just to really put this one to bed, China betting it can win a trade war is playing hardball with Trump. Remember, they might be playing hardball, but coming into this, yes, you could argue it's mutually assured destruction, but from a relative basis of the start of the trade war, the U.S. economy was bigger, it was stronger, so we have farther to fall, which means that China is closer to going on tilt, which is kind of my basic thought of why they are going to fold first, because I wouldn't say either side really holds all of the cards, but we hold more of the cards and we're bluffing less than China is, at least at this moment in time, which is why we're talking about the taco trade, which is why the market is already pricing in the fact that we're not going to see the 100% tariffs on November 1st. Of course, that doesn't mean in the short term, we can't see the market really take a hit from surprise, surprise, President Trump popping off on Truth Social. Of course, that could happen at any moment. But in general, if we were just looking at the pure odds of the situation, it is more likely than not that all of a sudden members of the administration start to leak out some commentary of, oh, we're making great progress. I don't think we're going to get to the tariffs, this, that, the other thing. And before you know it, heading into November, as we remove that uncertainty from the market, we do pop to a new all-time high. So am I saying that this is guaranteed? No, but I'm saying right now, if you had almost like a tree root system and every single root had a different probability assigned to it, I think right now the probability root with the highest odds is basically the 100% tariff never goes into effect. The market recovers and we see a new all-time high heading into the later part of October, the earlier part of November. So not a guarantee, but I would say that is very much the highest probability pathway given the current set of information. Remember, another thing in play is the government shutdown. So yes, both of these could end up being really bad in the situation that the trade war with China escalates and the government shutdown continues. But remember, both of them could end up being really good if the government shutdown stops and the trade war escalation stops and if anything reverses course. So both of these together have that capability of really sending the market higher or really sending the market lower. Obviously, if I had a crystal ball and could definitively tell you how this would play out, well, I probably wouldn't anyway, because I would just be trading it myself and I wouldn't be, getting ridiculed by the internet. But alas, I'm not a part of the administration. I don't have insights into that insider information. So I'm just laying out the two possibilities. And obviously, we should play it accordingly as those cards hit the table. Trump shutdown power grab goes unchecked by GOP lawmakers. Well, you might believe it, you might not. But what's more interesting is the odds. I'm not really here to berate you on what your politics should be. I'm here to tell you the stats, facts, and figures of increasing your opportunity of making some money. And right now, according to Polymarket, there's a 66% chance. There's a 2 in 3 chance that the shutdown starting on October 1st will go for longer than 30 days, as in basically going into the month of November. And looking at call sheet right now, the line in the sand is 35 and a half days. So both of these are basically saying this at minimum, as of right now, will be going into the early parts of November. So both of these betting markets agreeing. So most likely that will happen. For us in the short term, that does have implications on the fact that we're not going to be getting the initial jobless claims tomorrow. We're not getting the CPI. We're not getting the PPI. We are not going to be getting non-farm payrolls, unemployment rate. They're on the list now just in case somehow the government starts back up, because remember, when the government shut down, the Bureau of Labor Statistics is also shut down. So that is the organization, the government organization that gives us all this information. So anyway, as they're shut down, not only are they not giving us the numbers, but we're also not collecting new information, which is going to be very interesting for the Fed. Remember, the next Fed meeting is October either 28th or 29th, whatever that Wednesday is. And as of right now, according to the CME watch tool, there is a very high likelihood that we get another 25 bips rate cut. But please appreciate how difficult that is to do with no new information. There's no new inflation information. There's no new jobs information. And that's what Powell was actually talking about yesterday, that they do have another set of tools available to them to kind of give them an idea. And this is coming from private companies such as banks and looking at their earnings and their commentary, but this does not make the job any easier. So that was a little bit of uncertainty from Powell's speech yesterday, but one thing the market really liked was his commentary on quantitative tightening, also known as QT. Fed's Powell suggests tightening program could end soon, opens door to rate cuts. That's as dovish as a headline's ever going to get in the current environment, and obviously the market liked it. So when I put that together with the likelihood that we're not going to hit China with a 100% tariff and the likelihood that we're going to open the government back up in November, when I put those three things together, it tells me we are on the way in the month of November and December, most likely to be hitting new all-time highs. Is it a guarantee? No, but I'm just trying to give you the reasoning of why I believe that is the highest likelihood pathway. Does that mean it's guaranteed? No, but it's just a game of odds. Don't forget that we are in earnings season. It officially kicked off yesterday. So for the next 4 to 5 weeks of our life, it's going to be earnings, and more earnings. Today, we heard from ASML, Bank of America, and Morgan Stanley. After the market closes, we're going to hear from United. Most likely, it's going to be a beat because Delta beat last week, and they are very similar businesses. The thing you might want to pay attention tomorrow is TSMC and Charles Schwab. And then later on this week, American Express to kind of see what's going on in the world of credit cards. But rewinding to today, Bank of America tops estimates on stronger than expected investment banking results. And as you can see, Bank of America going up 4.8% after gaining 2.5% yesterday, looking very strong. Morgan Stanley posts massive third quarter earnings beat. Let's see how Morgan Stanley is doing right now. It is up 4.4%. So the financial sector, XLF, is looking good, gained 1.1% yesterday, up an additional 0.7% this morning. How is SoFi looking? Fuck yeah, dude. SoFi up 2.4%. It didn't have earnings. I just happen to have a position on SoFi. So when I see that it's up 2.4%, that makes me as happy as a clam. Moving over to the tech sector, ASML looks to calm fears over the 2026 growth as it warns of China's sales decline. Well, no one cares about that sales decline word because right now ASML is up 5% in pre-market trading. Look at this doozy. Look at ASML on the daily. Look at that beautiful gap up. Obviously, there's the downside gap fill, and you also have the breakout at 1,060. And I'm not here to rub it in your face, but I am 100% here to rub it in your face. I want to let you guys know, where did I finally add this boy to my long-term account? I added, ASML, your equity? How do you know I'm in at $721. My total return as of market close yesterday was 43%. I got in at 720. Dude, I think I actually bought it all the way. Maybe I got it back here. It's been a while. I've been in this for a bit, and for a while it wasn't looking good. But my average fill is $721. You should be jealous. Jealous right now. Obviously, just playing that semiconductor pop. Yeah, that is looking good. That's looking good. All right, where are we at? Oh, if you haven't already, sign up for the newsletter, macquarie.locals.com. It is free, free, F-R-E-E. You never have to pay anything. You never did. You never will. Every single Sunday to your email inbox, you're going to get a breakdown of what's going on in the market with some really cool photos of Piper. These are not AI generated. I do weekly, if not daily, photo shoots with my cat, and this was just some of the Halloween pictures with her. Obviously, I give you a breakdown of earnings, of all the major macroeconomic events, and most useful is the seasonality of each individual day. So over the past 27 years, this day was bullish, then bearish, then neutral, and back to being bullish. So it kind of nets out to being neutral, but in recent years, it's definitely favored the bulls a little bit more if you have a bit more of a recency bias. So I want to call that out. Tomorrow is straight up bullish, while Friday is leaning bearish. So I just want everyone to know about the seasonality. Is seasonality the end all be all? No, but it is good to know about the headwinds and the tailwinds. All right, bringing it back to the holistic picture of the overall market. What is going on? Did I just delete something that I need? I think I did. Is it this one? Is it this one? Is it this one? Oh, I accidentally deleted one of my charts that I very much needed to chat with all of you guys. All right, so here is the overall situation. This is the daily chart of the S&P 500. Obviously, yeah, Friday was brutal. We didn't really do anything on Monday. We looked to collapse on Tuesday, and then we made a recovery. And now early this morning, we are right on top of the high. So we are right back at this line. Basically, we are at 6,692, as in we're at that line in the sand. As you can see, there's a giant call credit spread right above us, 6705. If the bull camp can get us above and hold us above that level, that is a massive win. The bulls are definitively back in control. As long as we stay below that level, well, that means that the bears have a fighting chance. I would say the overall situation, you can see on the screen now, there is this idea that, clearly measurable concept that more positive gamma has returned. So the overall situation, I would argue, favors the bulls more than it does the bears. But rewind to last week, the bulls were dominantly in control. We're now at the situation where the door is open for the bears, and the door is going to remain open as long as we are below 6,700. So that's going to be the battle of the day, really 6,700, but technically 6,705. Like I said, there's a giant call credit spread to the tune of 2.9 thousand contracts right here. Someone sold these calls, that will be resistance, and then it aligns with the key gamma strike. It aligns with the psychological level. So that's going to be the battle, and it's also basically just the high from yesterday. So if we can get above 6,700, great. We have a real shot to start to return. And in fact, on an intraday basis, if we can take that out, we might be talking about a Vanna rally all the way up to 6,750, just basically quickly filling this low trade volume area. But that's the battle. I don't know if we break. I don't know if we do or we don't. If we do, and you could get in with a low risk opportunity, you have a lot of reward. If we get rejected, well, we might get smacked all the way back down to 6,660. So there's the bull case. There's the bear case. Overall situation, it's bullish, but a little bit questionable. Similar situation in NDX. The Russell, the small cap sector, actually hit a new all-time high yesterday. So small cap looking pretty good. Bitcoin looking a bit weak after hitting a new all-time high. I put in a lower high, and if it starts to crack 110, that could be dangerous. But however, if it recaptures 116, that could actually be pretty bullish. The gift that keeps on giving is Oklo. This is I guess technically a nuclear power play, and it is gapping up to another new all-time high. SoFi is looking good, putting in a higher low. I'm looking for this breakout of 28, and I would love to see it smash through 30. AMD, I'm looking for this technical breakout. Palantir also setting up for a technical breakout. Apple setting up for a technical breakout. Microsoft setting up for a higher low. Broadcom setting up for a higher low. Oracle setting up for a higher low. Tesla setting up for a higher low. Nvidia setting up for an upside gap fill and potentially a higher low. CoreWeave, same thing. Are you guys seeing the general tune here? Everything dipped. The lows are kind of higher depending on the equity you're looking at. And this morning, we're seeing the signs of a potential reversal. Will we actually reverse? Well, I'll tell you better at 4 p.m. today. And really what I want to see, what's going to be maybe an early indicator of this is, does vol collapse? If you see VIX, VIX is the volatility of the S&P 500. If this collapses, that is the major ingredient we need for the recipe of a Vanna rally. If you don't know what a Vanna rally is, I described it best in the update video 2 nights ago. But really what you need to know is, as vol collapses, market makers don't need to protect their books for all the puts that they recently sold. As in, they don't have to be as short, as in they buy their shorts back. When you buy shorts back, that is still buying. And actually it could be aggressive buying, pushing the market higher. As the market goes higher, vol collapses more, so they buy back more shorts. And when they buy back more shorts and they see the price go up, people who had those long puts, they close their puts, which means that the market makers don't have to be hedged even more, and you get this positive feedback loop that sends you higher. A Vanna rally is similar in price action to a gamma squeeze, but mathematically they're prompted for 2 different reasons. And Vanna rallies are more rare. The last time we had one was in August of 24. Right here. So see how vol popped up? This was because of the yen carry trade. Vol collapsed. So vol up big, down. Maybe not looking too crazy to you, but if you look at what happened to the S&P 500 in this exact period of time, and once again, this is the last time that we saw it, you can see the S&P 500 took a hit from 5,540 all the way to 5,120. Then when vol started to collapse, you see this Vanna rally all the way back up to 5,650. This is a 500 point gain in the S&P S&P 500 in about 2 weeks. It went up about 8.5%. So once again, Vanna rally, it does not happen often. You're going to see gamma squeezes way more frequently. But when the environment is ripe for a potential Vanna rally, obviously I need to do my job and call it out to all of you. All right, folks. Hope you're feeling good for the day. I am hoping that the bulls absolutely dominate, but we're going to see how things really get going today. What are the interesting movers? What do you guys want on the right side of your screen? What are the things that have big moves? I mean, Oklo is up 6.8%. It feels like that might deserve a spot. AMD, 2%. Apple. What are the big movers? Avago's up 3%. That might be worthwhile. Tesla, Nvidia, all right, we're seeing some gains across the board. Well, whenever anything is going crazy, feel free to shout it out in chat. I'm more than happy to switch out what is on the screen and what is not on the screen. Dingity ding ding ding. The world's largest casino is now open. Best of luck to all. Play responsibly, and if not, have fun. I do want to remind you that at least as of market open, there was a downside gap fill opportunity to yesterday's high, and it still exists. The odds of us hitting 6680.70 are extraordinarily high today. Is it a guarantee? No, but with, I think, over 90% confidence, I could say that we are going to hit this level at some point in today's trading session. I'm personally not playing it because I just don't want to right now. I'm trying to let the market open and calm down and not do anything completely stupid. But I do want to let you know there's a very high statistical chance of us hitting that high value from yesterday. That's on SPX. On SPY, it's whatever the hell this value is, 665.83. On the Qs, it is 602.69. We're already getting some alerts. Tesla, a breakout alert on Tesla. There's still a downside gap fill, though, unfortunately. But Tesla putting in a higher low. I'm looking for that breakout of 443. Nvidia, not yet. Oracle putting in that higher low, looking very similar to Tesla. Avago looking the exact same. Microsoft looking similar. Apple looking the exact same. Palantir looking the exact same. AMD almost getting there. SoFi looking the exact same. And Oklo's the runaway train this morning. How is quantum computing doing? Qubits gapping up to a new all-time high. Rigetti almost at a new all-time high. IONQ looking to put in a higher low. So quantum computing is looking really good. Where was Rum at? Rum about to put in a higher low, looking for that technical breakout. Texas Roadhouse putting in a higher low. Actually, a nice 50-day moving average recovery. Bonds are higher. Oil is down. ETH is holding 4,000. Bitcoin's at 111,000. Gold hit a new all-time high. Silver almost hit a new all-time high. Very, very close. Basically, I just need vol to collapse, folks. If vol collapses, it looks like this party is going to keep going. Someone said QuantumScape. I don't know if that's an all-time high, but it's definitely a local high. So it's not an all-time high, but yeah, it is trending nicely. How is Open looking? Starting to break. If Open breaks this $7 value and snaps the 50 EMA, remember there's this downside gap fill. So Open might be done, though, folks. I'd be paying attention to it. It looks like it's getting a bit of volume exhaustion. Netflix, not really doing anything. Hut, going once again. Hood, I'm looking for the breakout of 141. Coin, nothing really. CoreWeave, setting up a higher low. NVIDIA, not much today. Oracle, okay. What else? SOUN, new high. That one's ripping. This is an AI play that I believe NVIDIA. It's not a new all-time high. It's a new local high, maybe setting up a test of that $24, $25 level. There's opportunity today, folks. No matter how you look at it, there is opportunity afoot. Opportunity. We never hit the downside gap fill. That's going to piss me off. Folks, life would have been way simpler if in the first minute of the day we just tapped that gap fill, because now at any point we trade today, we have to question, is the market going to dump for this downside gap fill? It might be one of these situations where we pop up into this positive gamma zone right here. I could show you on the spot gamma right here, 6705. Might be a situation where we pop up here, profit taking happens, and then we get knocked down to the downside gap fill. That is a possibility. So let's just watch this. Let's see how it plays out. I haven't done anything yet today. Speaking of which, excuse me. Speaking of which, hang on. I'm getting a lot of DMs for some reason. Oh, fuck, a typo. Hang on. If you're in the Discord, there's a typo in Coffee Thoughts. One of these should be a 7. There's too many letters in that. All right, I updated Copy Thoughts. There was a typo in the bull case, but just so you know, the reach target is not 6,675. It is 6,775. Getting a breakout alert on Rumble, by the way. Must be following through pretty nicely. Where's Rumble? Rumble, yep. All right, putting in a higher low. Rumble, next target around the high 8s if you happen to be in that play. I'm in Rumble. I don't actively trade it. I'm invested in it, so I'll still pay attention to it. But overall, looking decent. ASML is looking decent. It's still holding that 4% gain. We're kind of chopping around right now. No real trend out of the gate. The Qs almost got their downside gap fill. It looks like it was 2 cents away. So the Qs, the low on QQQ today was 602.71. The high yesterday was 602.69. So it's off by 2 cents. So hasn't quite gotten that fill yet on QQQ. Oh, I don't like days like this. Like I said, I'm bullish, so I want to make more bullish positions, but I don't want to do it until just life is easier when you get the gap fill, because then you don't have to question it throughout the day of, is the gap fill still coming, or is it going to be one of the rare events where we just simply don't get it? Oklo's up 7%, SoFi's up 2.2, AMD's up 2.6, Nvidia's up a good grip right here, Avago's up a decent chunk. You have Oracle's up 1.7. I'm seeing some decent green. Bitcoin's a bit red. Oklo's catching another bid. I can't believe I fumbled the Oklo play. I had a big position on it, and when things got sketchy last week, I think I ditched it. Maybe it was 2 weeks ago, but if I held this would have been like a 50K return for me. All right, it looks like we are setting up for maybe an early morning test of this key zone. I need you guys to understand that on the SPY, it's going to seem random. On the SPY, we're going to be at 667.75. And everyone's going to be like, why the fuck is the SPY having an issue at 667.75? Well, the issue is because it's 6,700 on the thing that actually matters. If you want to trade SPY, have at it, but understand, big money, big players are playing SPX, the actual index, which is going to be this gigantic positive gamma zone. All right, so that's the watch of the morning. I'm not happy that we didn't get the gap fills because it's going to make me hesitant that at any moment we could get the gap fills. But I guess that's just what it's going to be today. That is what it's going to be today. Please remind me, I have to play the 10-minute gap. The 10-minute ORBO for, am I on the right one? I just wanted to show you. Wait, can you guys see this? No, you cannot. I'm not going to mess this up today. There you go. I haven't traded anything yet. Decent. I'm up 4K on the evals on Apex. I'm up 2.7K. The ORBO trade is up $235. My manual trading is up 2.7, and Icarus is up about $700. So I have all the funded Apex accounts. I have the funded Futures Network accounts, and I have the two eval Apexes over here. Just working on a couple different strategies, doing this, that, the other thing. But I do need to trade this account, 5.7. Okay, I'm on it. And I need to, are we 10 minutes into the day? Not quite yet. I can't mess this up, folks. I cannot mess this up. And all the strategies are on. Okay. I need to do the 10-minute ORBO trade. You guys are seeing a little bit of how the pie is being made in the background because this is all for a video that will be coming out in the future where basically I'm using my own account to actually trade whatever in the world is happening with these ORBOs. It looks like we are going for that downside gap fill on the Qs. It looks like we are going for the downside gap fill. We just got it on QQQ. Did we get it on NDX? We believe we did. Yes, we did. Okay. So the gaps on the NASDAQ are officially filled, not yet on the S&P 500. And how much time do I have? I have 1 minute. So remember the ORBO opening range breakout. So it's the first bar, whatever time frame you care of for the day. So for this video that I'm making while doing this live stream with all of you is the 10-minute ORBO. So I care about the first 10-minute bar of the day, which is this guy right here that's being formed. This is the first 10-minute bar. Obviously, it's from 9:30 to 9:39:59. It is your first 10 minutes. It's the open, high, low close of the first 10 minutes. And my goal, and I'm trying to prove something in a video, is to take that ORBO trade every single day. And it looks like it's almost done. And I'm worried that as 10 minutes come, it's going to flush here. What is the low? 32.25. Uh-oh. This one's going to be tricky timing. This one's going to be tricky timing. Because it's like at it. So, all right, I have 10 seconds. It's going to just be tough to place the order. 26.50.
Order submitted.
All right, 23.50.
Order submitted.
Right. So if it breaks down, it's going to quickly catch it. And if it breaks out, 375. I'd prefer it break to the upside.
Order submitted.
And then that would be 675.
Order submitted.
All right, there we go. So the order set up. Obviously, I have a pending order for the breakout. Obviously, I have a pending order for the breakdown. This is day 3. The first 2 days have gone well. It's up $235. As you can see, I am trading 3 contracts for 3 points, going for basically $175 to about $200 per day. But obviously, sometimes there's slippage. Sometimes you can make a little bit more. Sometimes you can lose it. But I do want to call out while we're waiting for this trade. Well, maybe we should be patient and actually see how this one goes. Maybe we should be a bit patient. Maybe we should wait and see. How's this looking? So obviously, the order stayed pending there. I was just curious, which way is it going to break and not break? All right, well, here's your extremes of the day. I'm now on the 100 tick heart. Well, a little bit of profit taking. This is actually how it played out yesterday, where I really, really thought it was going to be a breakdown trade, and it got close to it, and then it actually recovered in the second 10-minute bar, and it ended up being a breakout trade. But I should clarify, this trade is wildly different than Icarus. This has nothing to do with Icarus. I see some people talking about it, and I just don't want there to be confusion. This is literally for a video that we're making for the other channel, talking about ORBOs and trading it, and when is it good, when is it not good. And here's the real answer, which I already know, is it's a good trade, but you shouldn't be taking it every day in every direction. So if your strategy is like, nope, I just take the 10-minute ORBO every single day, whether bullish or bearish, doesn't matter, I just take it, that's not going to be a winning strategy. But it can be transformed into a winning strategy if you apply some other filters, such as like, okay, what's EMA doing? What is options flow doing? What is the day of the week? That type of stuff. It is where you can actually transform it into being a profitable strategy. But just to kind of put my money where my mouth is, I'm making a video where I'm trading it every single day for at least 1 week. Maybe we'll extend it to 2 weeks. We're going to see how it's going to go. But I have those pending orders. And as we're waiting for this to play out in one way or another, I am trading this on a new account. And shout out to Gucci in chat. Gucci, I don't know if you're in chat right now, but I owe you a very special thank you. I'm trading it on FFN. So this is a company that reached out to me. It's another SIM-to-funded company, very similar to Apex, very similar to Take Profit Trader. It's a SIM-to-funded company. You sign up, you take a test. If you do well, you could trade with their capital. If you do well with that, you can actually get payouts. So it's like the others. But what's interesting about this is, first of all, they're running a disgustingly good deal. 50% off, buy one, get one, which basically means like you're getting 2 accounts for 50% off, and there's no activation fee. So they have evals and then also Express, which is straight to funded. So right here, for what's that, $87, you can get 2 funded accounts. $87, 2 funded accounts. So each one's $43, $44. So for the price of $44, because it's BOGO and there's no activation fee, you could go straight to funded. And right here, it's basically the same rules as Apex. Profit target 3K, max drawdown 2K. The consistency rules are a little different between Express and Standard. So the Standard is where you take the eval. But once again, it's 50% off whatever fee you have here. You send in your receipt, and then you get another account for free. So basically, take 50% off this, and that's what you are getting for 2 accounts, and there's no activation fee. So in the world of, like, I'm still obviously using other ones such as Apex right here.
Order submitted.
Hang on.
Order canceled.
All right.
Order filled. Target filled.
What the fuck was this? What was that trade? I don't know what that one was about, but okay, somehow made 145 on the 10-minute ORBO, and on the other funded futures somehow made 225. So not going to complain about that. 225, so already $300, $400 already locked in. But anyway, those two were trading on FFN. It is pinned to the top of chat. It is in the description of the video. But I know, so when I trade something like Apex, obviously you have to go through that stage of passing the eval. I know some of you watching would prefer to go straight to funded and not mess around with the eval at all. When you look at the cost of this, 50% off, and it's buy one, get one, and there's no activation fee, I don't think that there's anything that can beat this. For $87, you can go straight to funded on a 50K account, and you're getting two of those, and there's no daily loss limit. There is a bit of a consistency rule. There's a cheaper reset fee. So just something to consider for those of you who want to go straight to funded. Hang on, I'm getting another breakout, something like that. No, we're going up. All right, so anyway, it is pinned to the top of chat. It's in the description of the video. It's phenomenal. I mean, I've been testing it out for a week. I mean, right now, oh, I got lucky with that. Look at that. If that didn't lock in quick, it would have blown out. But anyway, you have seen that I've been using this for about 2 weeks now. Right now in the world of sim to funded trading, every single day, literally every single day, I'm getting an email of a new prop firm trying to reach out. And it's I'm not going to lie, it's a little difficult to try to weed through who are the good companies, who are the bad companies. And all I can tell you, I've been on this for a week or two. All I can tell you is that their customer service is very fast. Just yesterday, I had a question about their FAQs. They got back to me within 10 minutes. I believe all of their payouts happen within 24 hours. And on top of that, because of the low cost, I think it's a worthwhile thing to try out. So anyway, that's Funded Futures Network, dirt cheap offerings for both standard and express. If you have any questions, I could do my best to try to answer it. Like I said, I'm only with this, like I've only used it myself for a week or two, so I'm by no means an expert, but I know right now everything that I've dealt with them, I'm liking it thus far. But even this, less than 24 hours, yeah. So fast payouts. I believe their whole thing, average 10-second human support response time, daily withdrawals. So feel free to check it out. Right now, my biggest mindset is I don't think you should have absurd or extreme loyalty to any of these sim to funding companies. I would say use the ones who have the best deals and the best offerings. I would say use the ones where, remember, you can use multiple at a time. You have to play the pros and cons off of each other. So I would say don't just get married to one and be like, nope, I'm with this and I'm never changing anything, because sometimes there's better deals, there's better rules. And to my understanding, to my perception, it appears as if that entire industry is very much in flux and dynamic. So it seems very, very useful to kind of bounce around and just keep taking advantage of whatever the best deals are, because that's going to save you your own money. And then you're going to have more attempts in the market to figure out your own trading system. Matt, today marks day 8 with Apex on 3 accounts for me. Any rough idea, timeline for confirmation payouts after I requested this based on everything in your experience? It depends on how you've been trading, and really, if there's a chance that you broke some of the rules, it does seem as if you go under review for longer. So it's different. I mean, I've had ones that get approved in a day. I've had other ones that take a week. So unfortunately, and it seems to kind of relate to, really, it seems actually to kind of relate to like your style of trading. If you have a lot of trades, it's going to take longer for them to review it. If you're just doing like one trade a day and just kind of swinging for it, and they can see evidently where your risk was set, it seems like it could be really, really quick. So I don't think there's a set thing. It seems like it scales up and down based on how many trades you executed, i.e. how many trades they have to review for you, is what I'm seeing. All right, so did we pop up to this? We did. We popped right up to 6,700. No one should be surprised by this, especially the fact that the downside gap fill wasn't hit. Literally rewind to the start of this, and how many minutes ago did I say Be careful for the push up to 6,700 and then the puke to the downside gap fill. Like literally 10 minutes ago, somewhere in here, I called that out as a very, very real possibility. I even said people are going to be here. What did I say? People are going to get confused of why we got rejected at 667.75. I said that at market open. And I said, oh man, they're going to think it's confusing and weird. And in reality, it's going to be 6,700. Folks, this is not rocket surgery. I get that there's a lot of people out there who want you to buy their $4,000 class in trading software and promise you that they're going to reveal this secret model of the market. And they're going to tell you that one thing that just no one else has been able to figure out. Well, I'll tell you what's going on. Just look at where the big money is. It's not rocket surgery. Look at where the fucking big money is, and you sit there and you say, okay, I wonder if people are going to react to it. That's it. That's it. All you can do is mark out the key levels. If price is not at a key level, do your best to not care. I know that's easier said than done, but if mark out the key levels, throw them up on your chart, set alerts, and then when you hear that alert go off, say, okay, it's time for me to pay attention. And when it's time for you to pay attention to either the breakthrough and the continuation or the breakdown or the reversal. All you have to do, the game in my mind, my framework of trading is pay attention to key levels and wait for the reaction at those key levels and attempt to playing it accordingly. So right here, this is a key level. This is the downside gap fill. I do not know if we bounce or not. No one on this planet knows if we bounce or not. I know that it's an important enough level that, okay, we might get a clear reaction. So maybe we dip to it. I see a dip buy opportunity and I could ride it back up here. Maybe it breaks down and I could ride it down to here. I don't know. All I know, it's a key level. So many people are fucking wasting their time trying to predict what the market's going to do, when as an active trader, if you're a day trader, a scalp trader, even a shorter term swing trader, all you have to do is react to price development. That's all you have to do. Someone is saying that Percent is talking right now. Do you guys know where he is? Percent. Where is Percent?
We were talking about gold getting past 4K this morning.
That's Johnson. Percent.
Yardeni last night suggesting 10K by the end of the decade.
Is he actually talking?
Possible, and says 5K is his year-end 26 forecast.
Up to
S&P
500% tariffs on China for the purchase.
Treasury Secretary.
We are told that the European Parliament will not pass a similar measure. So all I hear from the Europeans is that Putin is coming to Warsaw. There are very few things in life I'm sure about. I'm sure he's not coming to Boston. So we will respond if our European partners will join us. The second,
Oracle's ripping too.
We do have the 20% of the we have a 20% fentanyl
AMD and Oracle are looking
on
real good, folks.
And again, they have all but admitted that they sell the precursor drugs. When we had the discussion, they said...
Very quickly, I will say FFN has an interesting trailing drawdown. Folks, the best thing, I think I forgot to tell you, is not just the price. This is the only one I found that doesn't do unrealized drawdown. You know that whole idea of like, oh, like theoretically, if you got out here, that was your best value. And that's where they anchored their drawdown rule from. I'm so sorry. This is what blew my fucking mind about Funded Futures Network. There is no unrealized drawdown. It's just normal drawdown, as in based off of whatever your realized high was. The drawdown of where you blow out is not unrealized drawdown. It's your realized drawdown. This is the first firm I know of that does it. It is phenomenal. I was so excited to bring it up to you, because shout out to Gucci. Gucci brought it up in chat yesterday, and I was like, okay, I believe you, but let me just fact check it, read all the other rules, and I can 100% confirm it does not use unrealized drawdown, which is the bane of existence of all of this entire industry. This is the one firm I know of that uses realized drawdown, as in it allows you to manage your risk better, as in, okay, the trade goes a little bit in your favor. You can put your stop right to break even, and you don't care about getting stopped out, because if you're stopped out at break even, it will not hurt you. So that is actually 90% of the reason why I wanted to bring it up to you today, on top of the fact that they have this crazy good deal and you could go straight to fund it and have 2 accounts for $87. It is the fact that it is a realized drawdown and not an unrealized drawdown. Fucking phenomenal. Fucking phenomenal. Oracle getting a breakout. Oracle, okay, a nice technical breakout. I'm looking for it to take out basically 311. But it's kind of a flipped cup and handle. Here's the handle, here's the cup. Maybe we're going to make an exaggerated shoulder, head, shoulder, but on Oracle, I'm looking for this breakout at 312-ish, I suppose. For those of you maybe playing it, let's look at the key gamma levels. Let's look at maybe where some levels are of interest. Let me log back in. They always log me out right at market open. It's embarrassing. It's like they don't like me. All right, here's the flow on the day. No clear trend. We were flat, we were down, we were up. The Mag 7, something crazy happened. We recovered. Something got hit pretty hard. This is looking very messy. But what I was here for is to give you guys levels on ORCL. Old Oracle. Oracle currently trading at 310. 310 is a big target. Don't be surprised if it gets rejected here. If it can overcome that, we're talking 330. 310 is where there's quite a few long calls. So people who are long calls, now that they're going from out of the money to in the money, they might choose to start taking target or profits. So this could be a rejection zone. And if not, the next level is all the way up here at 330. Yeah, I guess maybe watch 315 a little bit, but 310, 315, 330, 315 being the least impactful of all of them. So as long as these people right now don't take their profits, now that they're going in the money, I'm looking for a follow through, the break of the 23rd and the 24th high. But really, I'm interested in this technical high, Monday the 22nd, because not is it just a technical high, but that's where we see people selling calls. Unrealized drawdown is incredibly stupid. Well, if you think about it, it's actually smart because it dramatically increases the chances of traders blowing out. So it's a profit machine for these companies. So I would say it's smart from their part and very difficult to deal with from our standpoint. Is it time? What's Basen? Is he still talking here?
Negotiated in the coming weeks before the before the leaders meet in Korea.
Thank you, everybody. With apologies again, they do have to get to another appointment right now. Thank you, Mr. Secretary. Thank you, Mr. Ambassador.
Thank you.
Thank you all.
Well, I guess that's the end of that. And apparently the market, maybe not loving what they're saying, but definitely not disliking it. All right. We're testing the call credit spread. And to my astute viewers, someone called it out. There is a new call credit spread in play. Alert the presses, call your grandma, call your ex from middle school and get her on the phone because we have a bit of breaking news. There is a new call credit spread in play. Dingity, ding, ding, ding. This is where I really need the soundboard. That's something just like absurdly egregious right now because 6730 was created in the trading session today. At 9:30, it did not exist. At 9:40, it did exist. The first 10 minutes of the day, someone slapped on a big old position. Like we're talking a chunky boy. 11.8 thousand, a 12,000 share contract position, not share, and a 12,000 that's a fat one. That is a feisty one. You guys thought Piper was feisty this morning? That's a feisty move right there. That's a chunky boy. What was it? 6630. All right, so we're going to have to do a little bit of an update here. We're going to have to, it wasn't there. This is that chonky boy. Watch that. That's your next target. If you are bullish and you are playing on the current call credit spread getting blown out of the water like Captain Jack Sparrow, if you think this fucking dweeb right here, this little pansy-ass call seller right here is going to get blown out right where we are, if you think that guy's about to get destroyed, your next target would be up at 6730 for day trading and scalp trading, obviously. At least that's how I look at it. Remember, this is all how I look at it, and I'm not your mom. There's no crying in the fucking casino. Take some ownership of your own stupid-ass financial decisions because I'm forced to take ownership of my own. All right, that's your next target, and then following that, 50 and 60. That's a chunky boy. That's a fat old cat. That's a fat old cat. Dude, I hope Well, obviously, I hope that this guy gets blown. I hope this guy gets destroyed. It's probably that stupid fucking Discord, the Captain Condor Discord. And I'm not hoping for another retail trader to lose money, but I am, because if that gets blown out, that means I make more money. So I'm not really saying this maliciously, like I'm getting stoked that they lose money, but I would be stoked if I make more money, if that makes sense. So I hope they get fucking blown out. But the odds of it are low. I should let you know, to be honest, that's such a positive gamma influence that's going to be legitimate resistance, which means there's going to have quite a bit of hyper aggressive bullish buying to be able to break that level. So the odds of it are less than 50-50. I would say it's more of like 60-40, 60% chance we get rejected. So more likely than not, we get rejected. But hey, a boy can hope. A boy can hope. Fat cat is on my lap. Dude, there's nothing like getting all your trading in and your working done with your cat on your lap. Something about cats, man. I love dogs too. I'm not one of these like, oh, I love cats, I hate dogs people. I'm just a pet person, which is weird because I'm allergic to most pets, but I love them, dude. Give me a dog to hang out with all day. Give me a cat to hang out with all day. I've never really met a ferret, but I bet those are cool little fuckers. Same thing with a fox. Mom?
Target filled.
How? How did a target get filled and I lose money? That's fucking stupid. That's actually fucking stupid. And it's going up in my favor anyway. Oh, fuck you. I hate trading. I'm back to hating trading. Why would it put my profit target? Look, it thinks it hit its profit target at a level below where it gets in. Long entry, 2650, profit target 25. What crazy fucking person would be putting a profit target in below where they fucking got in? What the fuck? That is so dumb. What? Dude, the data that they give you in SIMDA funded, and now it's still going. I don't want to talk. I don't want to talk about it. I don't want to talk about it. I don't want to talk about it. Every day, you fucking idiot. I don't disagree. What's crazy, Dave, is you're calling me a fucking idiot, but no one's disagreeing with you. Above you, Jay Hundo. Below you, Trex. The host of the show, Matt. No one's You're stating that as if it's a newfound piece of information. You're making this proclamation as if it's like, as if we don't know. Literally everyone here knows it. I know it. You know it. Chat knows it. My mom knows it. We all know it. It's not new. We get it. I'm an idiot. My wife even knows it. Like, dude, it's not a new piece of information. I'm sorry. My mom took Tylenol when she was pregnant with me, and I would do better if I could, brother. I would, but all that fucking acetaminophen is still in my goddamn brain, and I can't get it out. All right? Just give me a break. I'm trying my best, brother. Dude, trucking is a great job, to be honest. Screw trading. Nah, too scary. I don't know how to back up those big-ass trailers. I don't know how to back up those trailers. That would have caused too much anxiety in my life. The Mag 7 looks crazy. The S&P 500's had a strong recovery since 949. We're watching 930. We're watching 705. We're watching 660. Dude, in the event that we break and rip, 760 would make me piss my pants in a good way. I want to clarify. I know some people in here would be like, wait, is that good or is that bad? In a good way. Dude, SoFi's picking up a little. As predicted, where did we have profit taking? Right at that level that I said, hey, be careful. We might have profit taking. It's crazy. Woo, Apple's taking off. It'd be nice if fucking Microsoft could wake up. It'd be nice if Tesla could have a 10% rally. Apple's looking good. SoFi's looking good too. Apple's really going here. I talked to your college roommates. They say you do, in fact, know how to back that truck ass up. They would say that. They're nice guys, you know? They just support me in my endeavors. Like Matt and his like little podcast thing. It's a supportive group. It's a supportive group. I had the kind of friends that like they would have all these like awesome parties and like they wouldn't invite me to it because they like were worried that like I would maybe not have a good time. So they would always like tell me about it the next day to protect me, which is like so nice. It's so caring. They're like, yeah, it was loud and it was up late and we know you care about school, so we didn't tell you. And like, it always sounds super, 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 super cool. And I have to admit, like, I kind of wish I got invited to some of them, but like, I understand it. They had really good reasoning. They're like, yeah, like we couldn't invite you because like the sound and we like our phone, like all their phones would get broken all the time, which like I feel bad for them, honestly. Like it shows you that whatever you're struggling with, like maybe someone else has a different struggle. There I was like jealous kind of that I missed out. I had a bit of FOMO of a really cool party and music and hot girls, and like I would lament and stew in my own misfortune, but there they were like with broken phones, not able to reach out to me. You know, that sucks too. And like, just how lucky is it that it started working again magically the next day? Like, so like, it shows you don't know what other people are battling. You just don't know what other people are battling. Like there I was all bummed out, but in reality, they had a tough time too. They wanted me there. Imagine their emotional state, like of how embarrassed they felt, like, oh, we wanted to invite you, but our phones were broke. Like that's a tough one too, guys. You just never know what people are dealing with. You just never know what people are dealing with, you know? You think he has a barbed wire tat? I have no tattoos. I kind of want a tattoo, though. I'm going to be honest. For a long time, dude, we're going to 30. We're about to fuck this guy up. We're about to American History X curb stomp this guy. This pansy-ass call seller. Ooh, I'm going to make a solid risk-reward trade in a positive gamma environment and take advantage of price exhaustion. Ew, I know how to trade. Ew. Losers. Absolute I'm tired of all these nerds knowing how to trade and they just ruin my day. That's what we saw in Oracle. All these bum asses fucking taking profits at reasonable level, ruining my day. If you don't get a Piper tattoo, I quit. Dude, I will 100% get a Piper tattoo. Whoa, wait. I missed Mike? Mike, you've been here for how many months? Wait, fuck, it doesn't say anymore. Is it 55 months? He's been here forever. He's an old man. Is this a Vanna rally yet? I don't know. Let's look at the VIX. VIX is coming down, but not hardcore. And are we seeing a bunch of puts get punted? We're seeing some puts get punted for sure, but it looks like there's 0 DTE puts. So not like, remember this thing is always a gradient. It's not binary of like, yeah, you're in it or no, you're not. It's like, okay, you're seeing some or you're seeing a lot or it's a gradient. I am seeing the VIX come down. I'm seeing some of these puts get punted. So yeah, the market makers to a certain degree are getting out of the shorts that they use to protect their book. And guess what? We're seeing a push up. If you start to see the longer dated puts outpace the 0 DTE puts, that's where it gets, dude, holy shit. We're going for it. We're about to fuck this loser up. Come on, team. Together, we can ruin this trader's day. With a little bit of grit and a lot of perseverance, together, we could team up and take this loser out. I've been watching Matt since 2021. My real fans were actually stalking me before I even started making content, so let's not brag about that. We have some people in here that are like, I've been watching Matt since 2013. He got into college, and I'm just watching him eat dinner through his windows. You know, and watch him sleep at night. Those are the real supporters in here. The guys who express a lot of voyeurism. Dude, should I look at my account? I have been legitimately afraid to look at my account for a minute. Oh, dude. America. The American dream, brother. And it's just like, we're so fucking back, dude. We're so back. We're so fucking back. Just, just when they thought they could take old Matty Kohrs out, just when they thought your boy was gonna collapse, you can't do it, man. Just fucking everyone was wondering what I was gonna say if I lost. Everyone was wondering. I guess we'll never fucking know. I guess we'll never fucking know. Dude, this is what it's about. This is what it's about.
I know he's gonna wild out and he's gonna do something crazy. Everybody wants to know what I would do if I didn't win. I guess we'll never know.
Folks, this is what America was built on. This is what America was fucking built on, team. Dude, who else is doing this stuff? No one. Let's put on our protective eyewear, folks. I don't want anyone getting hurt out there because we're 8 points away from stepping
Target
into.
filled.
I swear to God, if I lost more fucking money on that trade. Stop, you stupid trading robot. You dumb motherfucker. What are you doing? What the fuck is going on today? How do I put in a delay? How do I say, hey brother, wait a fucking minute. What is with my code? Hang on. Can I switch my code in real time? Does anyone know how to put a delay into this code? Hang on. I'm opening my code. I'm opening it up. Oh, yeah. No, that's on me. I put in the stop loss before the profit target. That's... Fuck. Yeah, that one's on me, Tonto. I'll take the hit on that one. Yeah, the code is out of order. Shit. Yeah. That one's... Is it out of order? Wait. Would that actually fix it, though? Because it thinks it's... What was the order of operation there? What did it actually think happened? The profit target... No, the profit target should be last. Because then it can accurately compute where you got in. Hang on, it worked better yesterday. What was the order that I had yesterday? The profit target did get put in last yesterday. I don't think I actually fucked it up. Why? It's not properly computing, or it's putting in the order... All right, I changed the code a little bit. Where the fuck is it? Now I just caused my code to error out. Shit. All right, code is updated. Code is updated. We don't need that anymore. We're going to disable, enable. All right. So technically these were both winning trades, and something about where it was putting the profit target was not good logic. Was not good. All right, we're going to give it a whirl. We're going to give it the old college try. Dude, what a fucking... I mean, just come on. Who's doing this type of stuff, you know? What a comeback for the ages. Well, I'm not actually doing anything until I see this get tested. I want to see this fucking jabroni. I want to see how tough he is. I want to see, did he size up again? It got bigger. It's now 13.2. They added 1.4 thousand contracts to that position. They're really scaling up for a fight right here. It was 11.8. Now it's 13.2. That's a large call credit spread. If you don't know what a call credit spread is, it's the combination of selling a call above you and then buying a call even higher. It is a neutral to bearish bet. It's equivalent to an under bet in sports betting. You're basically saying, hey, when the market closes, I believe we will be below 6,730. It might be by a cent. It might be by 100 points. We don't know. It's an under bet. It's a binary bet of, I think we will be under this value. It doesn't matter by how much under the value. They're basically just saying at market close today, they think the market will be below 6,730, and it's a large bet, 13.2 thousand. Wow. VIX is taking out the low from yesterday. We have a real shot of breaking if the VIX collapses below 18.6, the low from Monday. So I'd be watching closely there. You know what? Do I have an alert set up on this? Kind of. Yeah. You want this to get taken out. The low that we saw at 2:30 on Monday. And you don't want that to get reverted. So I have some alerts for vol collapsing, which would be most likely happening in sync with this test of 30. Oracle, we have profit takers. AMD is having a great day. And Apple's I didn't check my other account. Hang on. Underpants are necessary. I wish I had pants on. Oh, fuck. How do I want to do this? I mean, it's still red, but I could really minimize a lot of my damages right now. You know what? I'm strongly considering doing a lot of rolls at this level. I'm going to set that alert up. I don't want to miss this. I don't want to miss this. Dude, I swear.
Order submitted.
Don't lose me money this time, asshole.
Target
All right,
filled.
we're back in the green. Something worked right that time. I'm seeing more green across the board. All right, so maybe the new code added in a slight delay so it could calculate the profit target properly. That was the unfortunate mishap, is the profit target was not getting in there. It was actually getting put in too fast. I needed to slow it down relative to the entry. So what was slow was the system computing its entry price. And relative to that, it was putting in the profit target too fast without knowing the entry price. That was the technical issue. But hey, we're back in the green. As long as the debt keeps growing, you're good. Sit. They aren't fixing that shit anytime soon. I don't believe in debt anymore. Just like as a concept. Never seen it. Don't think it's real. All right. Very much hoping that this low at 1014 is just a higher low, and I don't want to be testing this. So at 1012, 1014, whatever you want to call it, obviously we pumped, we pulled back. I'm hoping this is just a higher low and we bounce off of it and take out the intraday high, because then that would give us a nice risk point to kind of base our trades for the remainder of the day off of. Damn, it's slow. But we might be. All right, things are calming down for the first time today. We've entered a little bit of a sideways choppy period now. The Mag 7 getting a nice pump starting at 9:45, but really going off at 10:05. S&P 500, people rode up to 1010 and now they're taking profits. Actually, right now in real time, you're seeing a lot of 0 DTE call profit taking. A lot of it being locked in right now. Shit. Someone is unloading 0 DTE calls. They rode it up until 1010. What are they reacting to? They're reacting to the touch of 24, which is weird because there's no one was playing 25. They almost were front running this. So they weren't paying attention to this at all, actually. They front ran it by 5 points. That tells me that it's uninformed retail traders doing this because they reacted to the psychological level without knowing that it was not a key gamma level. But regardless, you're seeing it get unwound in real time. That's this green drop right here. That's a bunch of calls being sold. Most likely they were bought to open and sold to close. We're not 100% sure about that. You don't know till the end of the day. But most likely, you could say with high accuracy that this was buying to open and this was selling to close. And then obviously it has the impact of dropping delta. When you drop delta, that forces the market makers to hedge their books in a bearish manner. But just a little bit of a dip. I think this is just a pit stop. I hope it's a pit stop. Am I biased? Without a doubt, I'm biased. I have way too much money in the bullish direction. So don't come to me for non-biased commentary when it comes to my own plays. I could try to be an adult and explain what the bear case is, but I'm still letting you know that what I'm hoping for. If that breaks out, I'm going to play it. Web Trader. Let me get into my Vanquish account. All right, let's get this ready. 67.30. All right, I'm not doing it yet. I'm waiting for that breakout just because it's, in my opinion, good risk reward. Fuck, did I miss it? I did miss it. Shit, go, 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 go. America. All right, I'm in at 8, so I'm getting out at close with a single order. I'm getting out at 950, and my risk is obviously the recent low. All right, working. I'm in. Those were from yesterday, so 10:15, 10:15. These were, I was doing a video yesterday, so I'm in market order, average fill of 8, attempting to get out at 950. I'm targeting a 1.5K profit. Obviously, my risk is this low right here, this 1018 low, but I'm trying to play this little trend line breakout. So I'm going to move that off the screen so I can watch it just in case I need to ditch it early for some reason, but I'm just setting up. Like I said, I'm telling you right now, my risk is 1018, and really my target is this push up to either 29 or 30 flat. Hopefully the S&P 500 delta flow stops vomiting the way. So I was ooh, shit. That's not so good. I was hoping that this was the bottom here and this pop back up would have more legs on it. The delta is getting hit aggressively right now. Price, not so much. I find that to be surprising. Wow, more calls just keep getting sold, but price is not reacting to it. A lot of people are getting out of their calls, but I mean, I'm not going to complain that price is holding up, but definitely a little bit of a divergent move right there. Definitely, but like, look at that. It took someone a full minute to just get out of that chunk of calls. Was that a new positioning? We might need to wait for, the next 10 minutes to pass so we can see an update here, but that was weird that it didn't react to it. And once again, I'm not dude, I think it just got bigger. Now 13 this position keeps growing. You know, I might be wrong. Folks, when I'm wrong, I'm wrong. That this might not be selling right here. This might not be selling to close. This call selling might be selling to open, and they might be selling the 6730. I might have gotten this one flipped because, first of all, we're seeing weird divergent price action. We're seeing this position grow, all these sold calls, and look at we're seeing the call delta drop. Someone is selling calls. So I might have fucked this one up today Generally, it's buying open and selling to close, but putting together some of this secondary and tertiary information, this might be more people selling the 6-730 because as we are seeing this grow, we're seeing the call delta drop, as in someone is selling calls. So that might be explain why we're seeing a little bit of the price divergence. It might not be getting out. Interesting. Interessante, Batman. My aunt is a Snoopy collector. I think that does relate to call selling. All right. Well, while we're waiting for this test, do you guys have any questions, comments, concerns? The Goonie Trading Discord. Remember, funded futures, this is a crazy deal. I highly recommend you guys check this out. Like, this is an insanely good deal. Use that code Goonie, 50% off. When you buy one, you get a whole nother one for free. There's no activation fee, and there is no unrealized drawdown rule. Folks, if you are a sim to funded trader, this is at least a worthwhile try, in my humble opinion. It's pinned to the top of chat. It's in the description of the video. They are the partner of today's show. Make sure to use that code Goonie to get 50% off. When you buy one, you're going to get another one for free. There is no activation fee. Highly recommend at least checking out the website, just because I think that fact that it's realized drawdown and not unrealized drawdown, that alone deserves your attention, just because it's different from the entire industry. So check it out. It's pinned to the top of chat. It's in the description of the video. Oh, how did that go? Vanquish did not hit yet. In fact, it almost got there. I was up about 900 and I'm targeting 1500. It's break even right now. AMD is up and away. Avago is up and away. Come on, baby. Let's kick this thing into overdrive. I want to see this. And it sucks because here's what's going to happen. In the high likelihood chance that we test this level today, 730, I understand right now, speaking with you, as I said before, there's about I would give it a 60% chance we get rejected and a 40% chance we bounce. I know a lot of the times when I talk to you, I'm like, okay, it's about 50-50, and it's still roughly 50-50, but why I'm giving it more likelihood of a rejection rather than the bounce is because of this position. It's being well defended, and if anything, it just keeps growing and growing and growing. So that's going to be large resistance to break out, which is why I'm giving the slight edge to the rejection case rather than the breakout case. But knowing that, let's just, for the sake of this conversation, call it a 50-50. I know the smart thing to do. I get it as a trader. If I were your coach, if you came to me for advice and you said, hey, Matt, between Friday and today, I'm down $150,000. I'm trying to recover. We're getting a fortunate bounce here. How should I handle
Order
it?
submitted.
Okay, it worked this time properly as well. Okay, so I think my new code is now working because I'm checking it over there. The code I didn't change and it didn't work over there. So whatever that code change was that I made, we are looking good. But anyway, back to this conversation. If you came to me for advice or my thoughts or my opinions and you explained the situation of, hey, Matt, Friday with the Trump situation and the craziness over the weekend and Monday and Tuesday into today, I was down a lot. I was down in excess of six figures and we're getting this fortunate bounce and I'm seeing this key level. And granted, I'm not going to be made 100% whole, but the damage is far less. And I forgot to mention that a lot of these positions actually end up expiring this Friday, as in I have 2.5 days to figure this out. I would say, okay, cool. If you have 50-50 shot, if you have a 60-40 shot, unload decent size there. Take decent size off, and if it starts to reject and breaks a recent low, get out of the entire position. However, if you have a portion of your size, let's say half size, 1/3 size, and you break out, well, okay, you're in the idea of when you're in a hole, stop digging, that type of a situation. Rather than I know what's going to end up happening because I'm degenerate and I don't take my own advice, is I'm going to get there and I'm going to say, oh, okay, cool. I know this is an important level. And then I'm just going to fucking pray for a miracle that we break this gigantic wall and somehow keep going, which once again is very unlikely. I mean, at that point, like, not only do we have this giant wall here, but for me to get back to like even break even on these trades, folks, I'm in such a dumb situation. We're actually talking about a record high. Like, I would need it right here. 6764 is the high. The next level is 6760. The next level is where people said, okay, we might go up, but we're not going to go to a new all-time high. So like, it's just frustrating knowing I know how to play it, but then also being in my own mental purgatory where I know I'm not going to do what I mathematically should do. That doesn't mean I might not make more profit off of it, because sometimes the degenerate play gets more profit, but that doesn't mean it's the good trade. There's a big difference between a good trade. Oh, fuck, we just took out that low. There's a large difference between a good trade, the right trade, and the profitable trade. Sometimes they overlap, but that's not guaranteed. That is by no means guaranteed. What are we doing over here? What account am I even looking at right now? I'm all confused trying to explain this to everyone. We're having an issue at 25,100 on NQ, and we are having that same issue at 6,725. We haven't hit the area that I think is still interesting. I'm going to stick to it. I'm not changing my opinion. I still think 6,730 is the level to watch as of now. As of this morning, it was 6,705. Obviously, that got blown out. That brings us right back to this evident level. In reality, we're doing nothing. Ever since 10:07, we have stopped moving. Ever since 10:07, we are just in purgatory. We're range bound. You just got to wait for it. Same thing here. Actually, the Qs look a little bit better. But you can see that we are clearly range bound. 10:07, no real range. We're trying to break out, but we're knocking on the door of tech. Here's a look at options flow. Mag 7 is trending up. SPY, there's all that call selling, which I thought was people taking profits, but now I'm 50-50 on it. I don't know if this is profit taking on the 0 DTE, because we just keep seeing this position get bigger and bigger and bigger. I think it's people selling the 6-730s, which means as more and more people pile into that play, if they get busted, that could actually serve as the launch pad to go higher. The more people who are wrong, you get a crazier reaction. I almost got my fill there. I almost got my fill. Is it going to give me my fill or no? No, it's just going to tease me about it. It's like, we almost got you. Look at that. I was within a point. It went up to 15 and my fill's at 15.75. That's unfortunate. And I'm not even seeing that many people there. I don't know why it just didn't give me my money. Just give me, hey, be cool about it. You know, be cool, guys. Just be cool. Just be cool. Everyone calm down. Let's not do anything hasty. Let's not reverse the market before I can lock in my money. No, guys, stop. Let's just chill. Let's just talk about it. Let's just calm down. Let's calm down. There is no need to freak out. There's absolutely no need whatsoever to freak out right now. SPY is just perfectly range bound. NASDAQ tried to get going and then got smacked once again, but still overall, I would say clearly in this range. Well, that's unfortunate for me. Patience. Patience. We have to wait for this range to break in one direction or the other. And I am hoping very much so that it is in the direction to the north. Avago is taking off. May sell an RKLB call. Still have more thoughts? Like you're long RKLB? You're at a technical high, so it's not from the get-go the worst idea I've ever heard of. Let me see where there's options resistance. RKLB. 70. 72. This isn't that popular of a stock in the world of options for some reason, but you're over 70, which is really nice. Yeah. It sounds like you're asking, like, what's my thoughts on you scaling out a portion of your position? Is that an all-time high or just a local high? Scaling out a portion of your profits at that while riding the others, I like it. I think that's good risk-reward management. I think you're targeting a level where you're at a key level, 50-50 shot. Either break out or you get rejected. But to lock in some, to take some of that money off the table, I don't mind that. I think that's good management, and then you have some runners. So what you could do is lower your emotional capital by locking in some of the profits at all-time highs. You can set your stop to break even and let the runners run. I don't think that's so nuts. And I guess my side note there is we're above 72. I don't really see. You could scale out maybe a little bit more at 80. That's the only other thing I'm really seeing on this chart right here is 80. But you don't have to worry about 70. You don't have to worry about 72. We're above all that. You're kind of just watching 80 here. Matt's next X post FML at 3 a.m. Probably. All right. Pay the piper. Pay the piper. I am the piper. Please pay me. I am the piper. Please put the money in my hand. Every time I look at the screen, it goes the other way. I feel like the trick for me to get money on this particular play is to stop watching it. Ooh, the SPY is not doing what I need it to do. That call selling. So tech is looking decent. Look at the SPY here. The SPY is not doing what I want it to do. The SPY, it just is freaking me out a little bit because it's on the bottom of its range. And obviously to break down, you first need to get to the bottom of your range. Tech is looking a bit better on a relative intraday basis. Bullish, 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 bullish. Great. I'm not liking that we're pressing it. Obviously, we could just bounce again. I'm hoping buyers step in, but it's just incessant call selling. And now it's getting to the point that it's most likely the combo of the two. It's probably selling calls to lock in profits from some of the zero DTE pulls. And then it's probably others. It's probably getting more extreme from people getting into this play. Every 10 minutes, it's just getting larger and larger. So I think we're seeing call selling at 2x the rate. I think we're seeing selling to close and selling to open from other players. Some people are defending this, while others are probably playing the breakout, if I had to guess, of 6,700, and now they're seeing weakness, so they're like, fuck it, I'll just lock in. But we're still in the range. We just have to have patience and wait. Let me draw this out to 55. We'll just wait. Wait. Patience, patience, patience. Patience, patience, patience. The tech sector, not giving up. Not giving up the old tech sector. Look how, like, every time I look at it, I'm like, yo, I'm about to hit it. And it's like, nah, dog. Nah, dog. Just trying to embarrass Icarus. Literally every single time I bring up this chart, it goes red. And then when I look away, it fights back. Some fuckery afoot. Dude, it's just how unfortunate of a beat that would be. I was within a point. It got up to 15, and my target, due to slippage, slipped by, it went to 1575. It slipped by over a point. If I had the theoretical perfect entry, I would have already, if there was no slippage, I would have already been out of this trade. This trade might end up haunting me. Like, and then even with the slippage, it almost got it. It was within a point. It was 0.75 away. Come on. Show me that Yahtzee. Show me the Yahtzee. I can't believe it was within a point. Is it gonna be one of those bad beats? I can't believe it. Uncanny. Come on. Miracle bounce. I think Tech is trying to hold right now. Tech is attempting to hold. SPY is getting hit, unfortunately. It's all that call selling. I don't think there's much put buying going on. Let's see. No, it's pretty much there's more call selling, and we actually just got hit by a chunk of call selling. But there's still a little bit of put buying, maybe buying to open, maybe buying to close. I'm not 100% sure. But what's really moving the market today is the calls. The calls spiked from 950 to 1010, 20 minutes there. And ever since 1010 until this exact moment, I mean, for the market to have that test, we just have to wait for this call selling to stop. As of now, intraday, you can never tell if it's selling to open or selling to close. All you could tell is that there is selling. You have to wait to see how the open interest is truly impacted to know if it was creating contracts or closing out contracts. But regardless, I could just tell you that there's a lot of call selling, and we just got hit by another wave of it at 1038. And hopefully that was a little fake out. Maybe that was a little bit of just stopping people out who were using this 1018 low, and then we bounce off of it. At this point, I'd be using this trend line. I would definitely be using this trend line as my potential reversal. Fuck, dude. I'm not liking this. I need this bounce to happen like now, especially for these NQ positions, no less my swing positions. The swing positions I'm not panicking about like too much right now because it's 1040. There's a lot of time. Like I just want to know where I would love for 705 to hold. I would actually love for it just to bounce off this 50 EMA. So I have a lot of time left in the trading day to like do what I need to with the swing positions. Obviously, it was feeling really, really good at 1010. And honestly, tech is still making me feel good. I see the SPYs taking a little bit of a breather, but I mean, look across the tech situation right now. And actually, VIX is it almost broke 19. It's right at 19. So you actually might have people buying the VIX, supporting 19. So that's another thing to consider is VIX is coming to a whole dollar value. Another thing to, I guess, throw onto everyone's plate here. Yeah, the name of the game is, will this call selling stop? Once it stops, that's when we have the shot to break this trend line, to break the intraday high, and test this major level. That's a big if. It's a big if. If it doesn't stop, if we somehow get sucked back below 705, 700, that changes the entire story on the day. As of now, you have to be mindful of the fact that, yeah, we got kicked out of this range to the downside. That's not so good. It's happening because of a little bit of put buying, a lot of call selling, but eventually, oh, fuck. Now even the Qs are taking a bit of a hit. Now even the Qs are taking a bit of a hit. Oh, this is going to end up being a bad beat, isn't it? See, the Qs are attempting to hold. They're doing their darndest, while the SPY, it's still going. That delta is still puking. So if you're attempting to be bullish, at least the way I look at the market, if you're a day trader, scalp trader right now, and you haven't done anything, I would say you would have to wait for this trend to stop. At minimum, you would want to see the delta balance out. But it's just nonstop call selling. It started at 1010. There was a little bit of a relief at 1025, and then ever since it just keeps going. The delta is just dropping like no other. Hopefully it balances out. I mean, we are at the 50 EMA. That might be the support. We're getting seemingly bounced back up into here. Maybe this is the shot, but maybe it just gets rejected there. I don't know. We just have to watch it. Like I said, this is a game of reaction, not a game of prediction. Don't predict the breakouts or the breakdowns. React to it and then pay attention to flow. Where's your support? Where's your resistance? I think that's what a lot of retail traders get wrong in this game is they try to predict movement and they don't react to the data that's just in their face. It is very tough to rationalize on a short time period going long when the delta is getting this messed up. You want to see some bottoming right here. We attempted to bottom. That's a reasonable, if you went long around 10-20ish, okay, that's a reasonable attempt. You had a 50-50 shot. It showed some bottoming. It went up. It didn't hold. You probably got out for break even, maybe a little bit of a loss. Then we puked. All right, right now it's showing a little bit of a bottoming. It's a reasonable attempt. And as long as you are tight with your risk, you keep your risk in control, you can take a lot of paper cuts, and you don't need that to be right that often to make the entire recovery. You really don't have to be right that often. What do I want to do? 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 Well, doesn't look like we bounced off the 50 EMA, went back to this zone, and now we're awaiting. We are stuck in purgatory attempting to figure out, is this actually going to puke to 705 or is it going to bounce up? Remember at the start of the stream when I told you it's going to be way easier to be degenerately long today if we got the downside gap fill? We never got the downside gap fill. This whole morning when I was like, yo, minute one, it's going to make life easier if we fill it. There are still many players out there who are thinking we might puke down to 6680.70. That is the high from yesterday. That is the downside gap fill that we never hit. And it just makes it really, really tough. I would bet there are many traders out there who are looking at this saying, should I get out? And then they don't. Or like, should I buy this dip right here? It's the first real dip of the day. And they're like, nope, the gap fill was never filled. It just makes it a bit more difficult. It makes it, honestly, a bit of a pain in the ass. Hang on. Oh, brother, oh, brother, oh, brother, oh, brother, oh, brother, oh, brother. Oh, brother, oh, brother, oh, brother, oh, sister. Oh, brother, oh, brother, oh, brother, oh, brother. We have to wait. We have to wait. I would be watching this downsloping trend line for sure. I'd be watching the recovery back into this initial choppy zone because remember this low at 1018, maybe this was a little bit of a fake out. There wasn't support too far away, but it all comes, see how the pattern is actually different. We spiked, we puked, there was a little bit of recovery. Nope, it failed. So right here, there's at least a shot. I don't know if it's going to recover. If it did, if I knew we were going to recover here, I'd bet all my money on the recovery. But in fact, I don't. All I could tell you is we've at least stopped taking a massive hit to the delta. It seems to be stabilizing. So now it's like, okay, we just have to watch, i.e. we just have to react. All of a sudden, is the delta going to pick back up? I hope it does. Obviously, I hope it does. Oh, brother. Oh, brother. Oh, brother. Oh, sister. Oh, brother. Oh, sister. Oh, brother. Bullish, bullish, bullish. Momentum is bullish across the board. 5 minute, 10 minute, 30 minute, 4 hour. Even the 4 hour recovered on NQ and ES. I like that a lot. That is good. Can we hold this low? AMD, it's just, I know when you're zoomed in on like the 1 minute, you're like, oh, like what are we bouncing down? Like it seems big. And then you go over to the 5 minute and 10 minute and you're like, oh, we pumped and now we're literally just going sideways doing nothing. So when in doubt, zoom out. There's a very good chance zooming out will calm your nerves down in most situations. U.S. Treasury Secretary Bessent breaks down costs of Democrat-led government shutdown. That was just posted on Truth Social. Truth Social. What are we at? We have 2 minutes. All right. Is this going to be a low? Is this a new low we could play off of, a 1040 low? Bullish period of the day is not fucking now. It is in the latter half of the 11 a.m. hour is a statistically significant stronger period of the day for Wednesdays. I did a lot of data mining on the strong and the weak periods of the day. And the second half of the 11 a.m. hour is strong for trend following, as in whatever way you are trending in the second half of the 11 a.m. hour, pretty good statistical chance of a continuation in that direction. So feel free to use it. Feel free to not. That is up to you. Oklo up 7.2%. AMD up 7.2 and climbing. SoFi up 3.5 and maybe putting in a higher low. Broadcom looking good, chilling, but up 4%. Palantir up 1.7. Oracle having that big issue at 310, which is where a lot of people went in the money. Nvidia maybe a little bit of a double bottom. Apple giving a bit back. Microsoft, I need that way higher. Tesla, would love it closer to 450 instead of 440. Here's a look at the flow. Mag 7 hasn't really done anything since 10:15, and the S&P 500. The golden question now, is this the stabilization bottom ever since 1040, or is there another leg to the downside? No one can predict it. You just have to watch. You could even see it in price. We just kind of stabilize. We have gone from one range now to another new shitty range. We have to just wait. We have to wait from one shit range to another shit range. I personally, my bias is I hope it breaks to the upside, but remember, hope is just hope. That doesn't tell you anything about what other people are about to do. Hang on. What's going on here? What was that? SPY, the SPY 5 minute. But SPX didn't. I'm not the most happy that they front ran this by 5 points. I did not anticipate that whatsoever. Dude, are we really going to have to withstand the downside gap fill after such a nice pump this morning? I really, really hope. I wouldn't mind the gap fill staying in there for a minute, but they might want that. Fuck, I should have known better. And I did know better. I literally called it out to all of you of like, yo, this is going to actually kind of be a shitty day to be bullish without that gap fill. And here we are. Man, they went from exciting right to the 10 a.m. hour to now super lethargic. I mean, the Qs haven't gone anywhere. The SPY wasn't going anywhere. A slight drift to the downside, which obviously means you could just watch that downsloping trend line if you wanted to. Another flow alert. Okay, is that it? Are they done now? Someone sold another chunk of calls, and actually in real time, it's still going on. Just endless call selling today. Dude, are they just beefing up this position? Yeah, it's slightly bigger. It's now to 14.6. A lot of people are ganging up on this position at 6730. It started off when we first saw it between 930 and 940 at 11.8. And ever since then, every so often, it just keeps growing. And now it's 14.6 thousand contracts. Once again, it is a call credit spread. I'm hoping that this flow alert is the end of it. Like, holy shit, how much fucking calls out there need to be sold? Eventually it ends. There's only a finite amount of money in the world. We'll see. I'm looking for, at this point, I'm looking for anything in all reality. I'm looking for that trend line break. I'm looking for this trend. I'm looking for any amount of bullishness, honestly, folks. Any amount of bullishness I will take. AMD is looking phenomenal. It's looking really good. Avago is looking good. Even Nvidia is now catching a bid. That might help the Qs and the SPY. But AMD, intraday wise, AMD and Avago are looking awesome. What's the daily chart on Avago? Almost, well, we kind of double tapped right there. But if it could follow through above 360, 365 is that next technical high. How's AMD? Oh, beautiful technical breakout on AMD. Obviously, from a technical perspective, you're now watching 240. How's Oklo on the daily? AMD, SoFi, Avago, Palantir is looking good. Oracle was looking good, got hit at 310. NVIDIA intraday is looking better than the daily. There is an upside gap fill to 186. Apple trying to put in that higher low. Microsoft trying to put in that higher low. Coins doing nothing. Hood, I'm waiting for that breakout of 141. Hut is looking great, like really good. That's another play I fumbled. Meta, maybe trying to double bottom. Could be an interesting double bottom breakout if it can get above 735 and recapture that 50 EMA. Open, lower highs, same low, maybe a double bottom, but if it cracks that, it gets dangerous. QBTS, new high. Rigetti, almost. IONQ doing nothing. How's SOUN? That one's holding. Well, things have gotten quiet and boring, team. I guess beggars can't be choosers. I guess it's better than an absolute vomit, but I really, really just wanted to see that 30. So if this type of price action happened after hitting 30, I would 100% understand. I would, without a doubt, be like, yeah, that makes sense. It was kind of silly of me to not manage my positions at such a key level. But the fact that we were within 6 points of it. I find it very interesting, the point of the turn. We weren't even within 5 points of it. I guess that just kind of shows you that fucking anything can happen on any given day. Dude, are they going for the fucking gap fill? No. I don't want the gap fill. I should have. I'm kicking myself, but I really don't know what I could have done better. I could have managed all my positions, but I would have managed it within a point or two of this, not within 6 points. 24, 25 in no way jumped out to me as a significant level. So, of course, seeing how the chart played out, I, of course, wish I managed it. But at this moment, knowing that there's this gigantic level, I don't think anyone would have had the foresight to manage it. I think we would have popped. You'd been like, that's weird. 24, okay, high or low. Let's see how this goes. Right here, even on that bounce, like, yep, we are even at, like, it all looked good. And I get that there's this idea of like Monday morning quarterbacking and you guys could have your own thoughts and opinions. But remember, are your thoughts and opinions being based off of the information we had at that moment in time? Because at 10:10 to 10:24, everything looked great. There was no reason to think of the rejection there. Like, it was looking good. It truly was. And obviously it got questionable at 10:39 on this breakdown. But even that, it's like, oh, nope, we're bouncing off the 50 EMA. We're just getting this like slow, painful fucking bleed to the downside while tech is actually holding the entire time. I mean, look at AMD. It's going. Avago, it's going. It's just, for anyone in here, and I actually don't even know if any of you guys are like chirping me right now. Maybe you're all like of the same opinion. But I think that was an incredibly difficult call. And if you just arbitrarily got out at 24, you like, I don't know what you were saying. I don't know what empirical measure you had to say to get out there, because I am not seeing anything significant of that zone at all. The level was 670 on SPY. Who gives a shit? SPX is what moves the market, not SPY. SPY is the ETF created to track SPX. SPX is the big dog. It is the actual index. SPY, once again, is the thing created to track it. Same thing with VU. VU is created to track SPY. Like, SPX is the actual index. ES, same thing. ES is the futures contract for the S&P 500. All roads lead back to SPX. SPX is the source of truth that the other things are created to mimic. The 0.786 fib level bounced perfectly off that. Well, that's silly. As much as that works, there's more often that that's not going to work. ES includes extended hours. Technically, SPX trades extended hours. What do you mean? You can see where the SPX is at. It's not like hidden. Captain Condor has spy walls. No, Captain Condor does not. Oh, wait. Sorry, I misread. Captain Condor has spy. Okay, Captain Condor is an Iron Condor position. There are spy walls, but they are not Iron Condors. That was my confusion there. There are walls on the SPY for sure, but they are not Iron Condors. Actually, I didn't even see an Iron Condor in the market today. There's a call credit spread, but remember, Captain Condor plays Iron Condors, which is a call credit spread and a put credit spread, and it sets an upper and lower bound on the market. Today we're seeing a bunch of call credit spreads, which is one half of the Iron Condor. That's where I got confused. But just so we're all on the same page, especially if there's new traders in here, just to get a little bit more familiar with the, I guess the verbiage in this. Captain Condor plays Iron Condors. Iron Condors are the combination of a call credit spread and a put credit spread. In the market today, we are only seeing call credit spreads. What? The fuck was that? All right. The tech sector, AMD, is it Nvidia also caught a bid? It's not getting hit. Microsoft is catching a bid. Tech just popped. There's definitely a flow back into tech. The Mag 7 almost hit a new delta high, but for this to go, the SPY delta needs to stop bleeding. It's just, there's been an extreme amount of call selling. We went from a delta notional value of 1.2 billion positive down to, at the extreme, $1 billion negative. That's a $2.2 billion swing in the delta notional value of longer dated calls. For this to have any real shot at recovery, for this trend line breakout, this delta flow, see how it's looked a little bit right now? That just needs to keep going. You need to see that fucking skyrocket. Hopefully this little pop wasn't a fake out. Were there any questions on the whole Captain Condor thing? SPX is king. Got it. Well, it's just the thing, and the other things are being made to track it. SPX is the theoretical perfect S&P 500 index. It is the true index. SPY is an ETF, an exchange-traded fund created to mimic it. So is VOO. VOO is another exchange-traded fund created to mimic SPX. There's a gazillion of them. Every family fucking firm out there and their mother has something to track the S&P 500. Liquidity sweep on pop. You know, a lot of people say liquidity sweep, and I don't know if they even know what the fuck does that mean? Like, I even say it too, because it's become like part of trading vernacular. But it sounds like it's just a fancier way to say like either like a fake out breakout or a fake out breakdown, like a liquidity sweep. What the fuck's that mean? Like, I think there's a lot of people who try to take already well-known terms, such as a fake-out breakout, and then they try to over-engineer the verbiage to make it sound fancy just to confuse others. Like, when I was taught what you're referring to as a liquidity sweep, as in it was just a fake-out breakout. We wicked up and just got smacked. It was because of sitting sell orders. And, like, it seems like in the new era of retail trading, to make it fresh and different and new, people are seemingly being taught terms that sound fancier. And I don't know if it's for the point of selling a course because it sounds new and they're like, well, that's a new thing I got to learn, or like some shit. I don't know what it is, but it's all the same concepts that have been around forever. And I guess maybe with just every generation of trader, there's just like a whole new way to explain it, I guess. Can you explain how someone buying SPX puts, even in large numbers, actually leads to a lower SPX? Like, how is someone prediction so important that it forces buyers' action? It's not. That's not how it works. Okay, so you have to understand the answer to that, you have to understand the concept of a multi-dealer market and a single dealer market. Hang on, that was a large hit. There's not news or something, is there? I just want to make sure this is trading and not Trump talking. Okay, there's nothing on Truth Social. I'm now antsy whenever I see like a lot of volume hit the tape, like right away. I'm like, oh wait, is there news? Nothing right now. Nothing on Truth Social. Nothing on Twitter at the minute. So that was just someone actually trading. It was probably a hit to, yeah, right there. Guess what? More of it happened. That was more call selling. Son of a bitch. They just won't stop it. So coming back to, fuck, dude. Every second, it looks like we might have a shot to get out of this fucking bullshit. Just more and more calls keep getting sold. All right, coming back to your question of explaining why this happens, it's because of, the answer is hedging. So to understand this, you have to understand the concept of a multi-dealer market and a single dealer market. So when you are trading equities, when you are trading AMD, Avago, SPY, QQQ, I'm not saying derivatives, I'm not saying options, I'm saying when you are trading that actual thing, AMD stock, you are engaging in a multi-dealer market. As in, the other person, your counterparty, if you're buying, someone is selling to you. If you're selling, someone is buying off of you. That person could theoretically be me. It could be another retail trader. It could be a hedge fund. It could be a high-frequency trader. It could be a market maker. It could be an institution. It could be a hedge fund, and it could be an insurance fund. It's anyone. It's a poker table. Everyone is playing against everyone. It is a multi-dealer market, as in your counterparty could basically be anyone engaging in the market. The options market at its like structural core level is completely different. The options market is a single dealer market, as in instead of it being poker when you're playing against the table, when you're playing options, it's a more similar to blackjack. You're playing against the house. You are playing against market makers. Now, if you go look on Google or ChatGPT, you're going to say, but Matt, there's this counterexample, that counterexample. And yeah, you can find nuanced examples of other ways in which options are trading. But I'm telling you, 99% of options are traded in a single dealer market mechanism. As in, when you buy a SPY call, a market maker is selling it to you. When you sell a SPY put, a market maker is buying it off of you. You are dealing with market makers. Options are a single dealer market. Equities are a multi-dealer market. So the question was basically when someone makes a big move right here in the options market, why do we see an impact in the underlying? Why is this drop off in delta causing this drop off in price? And the answer to that is when the market makers give you that premium, whether they are buying the premium from you because you decided to write it, or if you're buying premium and they're writing it to you, they have to look at their entire book. They're looking at every single options that, like all the open interests. Are they long? Are they short? What is it? What is their risk? So they're looking at the delta. Delta, a Greek value, tells you many things. One of the things is basically the risk to market makers, because they have all this buying, all this selling. They look at the net situation and they decide, okay, here's my current risk. And like sports books balancing things out, they look at their risk and they say, okay, cool, I'm on the hook for X. Let's go out to the equities market and bring our risk down to zero. So for example, if you're buying a bunch of puts, what is a put contract? You are long a bunch of puts. That is your right to sell the underlying at a certain price on or before a certain date to the market maker. Well, the fact that you could sell them something because you are long those puts, they're going to go hedge out their book by the delta value, and on a proportionate rate, they're going to go sell that underlying. They're going to go short that underlying, because if we drop that much, they're on the hook for a certain financial amount. So to balance that out, they're going to go short, because if you drop it, that's how you balance it out. So because of the change in delta, as delta value goes up, market makers are going to get out of shorts and get into longs. As delta drops, they're going to get out of longs and get into shorts. So that is for them to hedge out their book. but the mechanism in which they are hedging out their book, as in buying or shorting, going long or going short, getting out of shorts or getting out of longs, those are trades that are hitting the actual equities market, thus impacting the actual equities market. So in a roundabout way, like I know we're kind of getting into the weeds here, the TLDR is when people place big options trades, it moves the underlying market because market makers have to hedge out their book. And on top of it, because it's a single dealer market, the trades are all visible. There's no such thing as dark pools in the world of options trading. So other people can see it, and it can prompt a little bit of FOMO as well. So there's other people trailing other large trades, which that causes more people to get into it, which causes the market makers to hedge out their books even more and basically do the same trade over and over again. So the direct answer is market makers hedging out their options book in either the futures market or in the underlying equities market. It's not as if when you buy a put, like right away because of that, it's doing something to equities. It's because of the following steps of market makers hedging out their book. Market makers trigger all your stop levels. That is not true. Liquidity sweeps, market makers take your money. That is not true. That's not true at all. Remember, market makers are not directional players. They're not saying, oh, I want to break out here, I want to break down there. Market makers are just taking the other sides of your trades. If no one is trading, market makers aren't doing anything. They're not just trading willy-nilly themselves. They are the liquidity providers. If you are attempting to buy, they sell to you. If you are attempting to sell, they're willing to buy off of you. In the world of options, they are exclusively the other person taking the side of the trade. In the world of equities, they take about 60 to 70% of those trades, while the other 40 to 30% is another player of many, many different varieties. But this idea that market makers are sitting there watching key levels and like, oh, we got to get it to that, that's literally how it doesn't work that way. They are only trading when someone is engaging with them and they're like, okay, cool, we'll take the other side of it. Remember, market makers do not make money off of directional moves. They make money off of playing the spread. If you're buying a stock at whatever, you have a market order and let's say the stock is trading at $10, and you hit a market order, they go out and they can pick it up for 10, but because you did a market order, they bought it for 10 and then they sell it to you for 10.01 and they profit that spread differential. Market makers make money off of the spread. They are not directional players. Directional players are retail traders and institutions and hedge funds. Market makers are not directional players. They literally just provide liquidity. That's all they do. And I think there's like a big misconception of what market makers do, what they don't do, this, that, the other thing. And a lot of people are just massively misinformed. Like there's a good chance that many of you in the discussion right now think that market makers are hunting your stops. They are not hunting your stops at all. They don't give a shit. If other traders are trading down to a level, well, okay, they're selling, they're gonna buy. If you're buying, they'll sell it to you. They just provide liquidity. They are taking the other side of the trade. So market makers smooth markets, but big players, endowment funds, move markets. Well, no, when those big players try to buy big chunks, they'll buy it off of them, or they'll set up a trade in a dark pool or something like that. Market makers just provide liquidities. Okay, like when you look at an options contract, you notice how sometimes in very popular contracts like SPY, the differential is just a cent. Well, in less popular ones, less liquid ones, the differential between the bid and the ask can be very, very large. It could be 10 cents, 50 cents, whatever. So what market makers do is they try to keep that bid-ask differential smaller, closer, and that is going to get into a really nuanced conversation of do they do it the best? And the jury's out on that. There are other mechanisms that arguably could make it better. So I just want to be honest about that. But this idea that market makers are hunting your positions and they're directional players and they want this down. No, it sounds good because it sounds like then there's a boogeyman and it sounds like there's a villain in the market. And it sounds like, hey, you traded well, but you were unfortunately just the victim of this boogeyman monster. And in reality, it's just a lot of people not taking ownership and also just not understanding what it is, not understanding what it is whatsoever. Robinhood just passes your order to market makers. Market makers are just order flow liquidity for most brokers. Yeah, exactly. That's 100% what they do. They're not this idea of like, oh my God, we see all these people with all these orders right here, and we're going to, you know what we're going to do? We're going to knock them out, and then we're going to play it back up. They don't give a fuck about that. Can you explain what a call and a put wall is? It's just where there's a bunch of calls and where there's a bunch of puts. It's just where there's a spike in, like a statistically significant spike in the open interest of calls or puts or both at whatever strike price. You have what a market maker is definition totally wrong. I guarantee you, I know exceptionally more about market making than you do. Exceptionally more about market making. PT Fitza, you don't know what the fuck you're talking about. You have no fucking clue. The amount of literal market making experts, actually people working as market makers who have come on this show, and we've interviewed them and asked them all of these questions, and you're just some dumb fuck who's learned some dumb shit on Twitter. We've brought like not just one, but multiple different interviews of actual market makers have come into the show and explained exactly how it works, everywhere from equities to futures to options. Technically, we haven't brought on a crypto market maker. Like, I guess that you would be right to, I guess, knock me for that one. But futures, equities, options, they've all been here. The interviews are up. They're there. You can watch them. Matt, are you a quant trader? I think some of you might consider me to be one. I don't consider myself to be one. The quant traders I know are much more mathematically rigorous, and they're actually just better at trading than they are. So I don't consider myself to be a quant trader. No. But that, like, this is what I hate about the internet is there's a lot of people who speak with confidence who actually don't know what the fuck they're talking about. And that's all right in many avenues and veins of life where it's not that impactful. But we're here talking about money. Like, we're here talking about like people's actual financial health and making the right or the wrong decision, or having an understanding of a mechanism that could impact their financial health. So like a lot of you might be like, oh, Matt's getting spun up troll. Like, okay, if this is something that's not impactful of like, I don't know, whatever you think your favorite sports team is, or the best player ever, or something even like religion, like whatever, at the end, we're never going to know like the answer to it. But in this world, it's measurable. It's science. It's math. It is a binary. There is a right, there's a wrong, and the right side can be proven. The wrong side can be disproven. And for many things in life that are like that, maybe it's still not worth the argument. But like I said, in this particular context, yes, it is very much worth it because people's financial health is on the line. So I get it that you get like, oh, Matt's going after him. No, because there's actual fucking serious like repercussions here when dumb fucks like that confidently spread misinformation. That's very dangerous. I've lived through this. I've lived through 2021. I saw what happened with GameStop. I lived through it with GameStop. I saw what happened with AMC. I lived through it with AMC. When people put out inaccurate information, people get hurt. And hey, I'll provide you with the actual information. If you want to believe it, whatever, feel free to fact check me. In fact, I implore you to fact check me, but it's so stupid. Okay, I've been trading since 1990 when you actually had to call your broker and tell him your trade. Cool. I don't give a fuck. That doesn't mean you're right. So because you've been doing dumb shit since 1990, you think that means, so because you had to call your broker, you now are aware of how market making works, even though the common age of market making is actually somewhat recent, as in maybe the past 15 years when Citadel really got going. Yeah, that makes sense. Cool. That's fucking sick. That's the dumbest argument I've ever fucking heard. Because you've been trading, you thus now know everything. You're an expert on the modern era of market making. That makes sense. You're smart. You're probably really, really good at this. What a dumb fuck. How stupid is that? There's literally like, I am right because I have a hat on. That's equivalent to your statement. Because you've been trading since a period where you had to call your broker, that is akin to your knowledge of current market making as it is that I have this hat on. That is the dumbest shit ever. I think we should ask LeBron James because he's a basketball player. And basketball players Obviously, because they're basketball players, they know about the modern age of market making. These are all logically equivalent statements. How stupid can people be? And what's crazy about it is you're saying that with confidence. It's like, no, this is why I'm right, because I've been trading since a period where you had to call your broker. Sick. Okay, cool. What the fuck does that mean? These people. So dumb. I trust the internet guy. Well, that's what I'm trying to say is you don't have to trust me. I implore you to try to go fact check me and try to correct me where I'm wrong on any of these statements. I am literally just pulling from the experts who have been employed in this industry, the modern era of market making, and they're saying this is exactly what I'm doing, and then it's fact checked by various sources. Respect your elders. No. I don't know if just being old inherently demands respect. I think people who have done or behave in a way that deserve respect get respect, but just age itself. There are young people who are absolutely phenomenal and they're smart and they're respectful. And then there's old people who don't know shit. Like just this idea of age in itself being the all-encompassing achievement. No, it's generally with age should come quality advice and wisdom because you've been around a block. But obviously we have circumstances where there are people of a greater age that don't know what the fuck they're talking about. Oh, this is a bleed off. It's just nonstop call selling, folks. You could see it from 10:10. It's lasted now an hour. 1 straight hour of call selling and a little bit of put buying, which is making the situation worse. It's adding negative delta to the system, same as dropping delta. So both of these movements in the 0 DTE, the light blue is puts, the green is calls. You are removing positive delta. You are adding negative delta. Fuck. The Qs are holding on. I'm actually really, really impressed with the tech sector right now. Like it's refusing to drop, but what sector is it? There has to, okay, energy is getting cooked. Financials not that bad. Utilities not that bad. Industrials are getting hit. Healthcare not that bad. Real estate not that bad. Consumer staples kind of getting a little hit. It's what I'm seeing is energy. Energy is getting hit. Tech is attempting to hold on. Consumer staples. Okay, so consumer staples, consumer discretionary, and energy is why we're seeing this mismatch of the SPY taking a larger hit than the Qs, because tech's actually holding on, attempting to hold on decently, while we are seeing an unload in energy, staples, and discretionary. What's going on with the iRobot stock? I have no idea what is iRobot. No idea. All I can tell you is I'm pissed off about this downside gap fill because I think I missed my exit opportunity. Maybe we find support right here at this key level, but I cannot stress this enough. I want this, like, if I can wave a magic wand and make something happen, I would stop this delta from fucking dying. I would allow a giant ass pop, and that would be awesome. However, you have to be mindful of this downside gap fill to yesterday's high at 6680.70, which is just beyond this low that we saw at 949 this morning, and it is just getting fucking walked down to it. The delta is dropping like no other, and it's becoming fucking incessant. All these times where I'm like, yo, we might be able to bounce, and the answer to that is no. No, no, no. It's just getting walked down. Jesus. Almost $2.50 on the SPY here. Energy clapped. Consumer staples and discretionary, but energy is the real culprit. Financials, Industrials are not looking good, but that's a smaller sector. Healthcare not looking the best, but tech's trying to hold, team. Tech is trying to hold. It's trying its mightiest, but it's not. Look, it's just getting drugged down by this right there. That's the issue. Mag 7 is actually looking pretty decent. Even the NASDAQ right here, tech sector is looking fine today. You're seeing it in price. You're seeing it in flow. You're just, the 0 DTE is getting fucking clocked with respect to the S&P 500. Which, positive, negative. It's getting clocked. We're still green. The SPY's up 0.8%. When in doubt, zoom out. We did break above yesterday's high. We were not really that far away from an all-time high. So this is one of those things where intraday it feels painful. But if you're looking at the daily chart, you're kind of saying, what's the big issue? This looks good. So remember, time frame is very, very important here. Daily chart, you're like, oh, got hit. Okay, double bottom recovery. Cool. Let's set up this intraday. If you're focusing on this move, you're like, what the fuck is going on here? So this is a very, very good reminder, especially for those of you playing options, that generally more time is what you need. The biggest issue I see of retail options traders is you are not giving yourself nearly enough time you need. I think a very good rule of thumb for just an average piece of advice is whatever time you think you need, if you're buying calls or buying puts, a good rule of thumb is probably just start off by doubling it. Obviously, we all have different strategies and skill levels and knowledge, but for the average retail trader that I meet, that is a very helpful piece of information, is whatever time you think you need, just double it. Matt's in overtime. Yeah, I stayed here. I don't even know why. I guess we were chit-chatting about this, that, the other thing. I was hoping for some sort of recovery, and at this point, I'm now interested in, do we bounce off of 6,700? We do have some support here. The breakout, the pullback. I'm just hoping we find support here rather than getting the downside gap fill. Dude, life would have been so much easier if at open or if at 9:45 we just tipped and got that. Life would have been way, way easier. But the fact that we haven't get it means there's still clearly a high amount of interest in people playing that, which is just fucking everything up intraday. 0 DT plus 0 DT equals 0 DTE. Well, that's not really correct math, but sure. Do whatever you want. I'm not your mom. AMD is looking great. AMD, what a monster. SoFi is looking good too. Percent-wise, Avago's looking good percent-wise. Tesla maybe putting in a higher low. Microsoft maybe putting in a higher low. Apple looking like the SPY. Nvidia not doing anything. Oracle not recovering after that profit taking at 310. Palantir flat. Oklo actually oddly taking a hit. Still up a decent percent though. All right, we did just take out that high. All right, folks. I think we're going to call it because things are getting real slow, real fucking boring. I guess I have a couple minutes. We could run this to 11:30. Questions, comments, concerns. Do you have questions on funded futures? Highly recommend you guys check that out. Code Goonie, no unrealized drawdown, just realized drawdown, 50% off. And when you buy one, you get another one for free and no activation fee. So for those of you who are interested in going straight to funded, this is a worthwhile thing for you to check out. Obviously, I saw some questions about Spot Gamma. That's in the link in the description. Are there any questions on Spot Gamma, on funded futures? Are there any questions on Trading View? Are there any questions on the Goonie Trading Discord? Are there any questions? I don't know, just any questions. What program do you use for marble races? I think Steam. What's your favorite mushroom? I don't have an answer. I don't know. Shiitake. I don't have an answer to that. Can we see a reverse? SPY looks like it wants to rise. Yeah, and you could also see a massive dump. Of course, both are possible. Like, do they use trade evade? They have multiple options. Is a monthly account good? I don't know what you mean by monthly account. FFN has no straight to funded. Yeah, that's the Express, isn't it, Gucci? The Express is faster to exhibition. I think you're confused because you can still get payouts out of the Express, I'm pretty sure. You could get payouts out of the Express that are limited to 10K, and then you get moved over to a live. Why is Discord age restricted on iPad? That's iOS. That's an iOS rule. That's not a Discord rule. If you want to turn that off, you go to Discord on the web or the Discord and you change it in your settings. But iOS just came out, or Apple came out with new security features that is blocking Discord. So to change it, you go to the web or to the website or the web app and change it in your settings to get those age restrictions off. But that is exclusively an Apple thing. You won't see it on Android. Do you think AMD is going to break 240? Sure. I don't know. That's, like I said, I'm trying to not predict. Predicting is a waste of time. A lot of you, it's weird that I can rant about don't try to predict, and then people are asking me questions on prediction. What the fuck just happened? Did Trump say something? I'm so like deathly afraid. No, Trump didn't say anything. What's the news? Trump taps $6.5 billion for troop pay this week. Mexican President Sheinbaum, trade talks with the U.S. are very advanced. That was all 15 minutes ago. I'm not seeing news as of now. I'm not seeing it on Truth Social. So this is just trade downward pressure. Every time we get a bounce, guess what? Calls are getting fucking sold like no other. Like no other. Jesus, man. This has just been going on forever. From 10:10 until now, there's no fucking break in this. Which it's painful, but eventually it has to stop. Like there's no such thing as an infinite amount of money unless you're the Fed here, but eventually it has to chill. There's a finite amount of options in play. But lordy, is that just getting hammered? Just no chill on it. Absolutely no chill on it. We were looking good and it's just getting smashed. I guess they just really want to evaluate the 6,700 level. As I said, I just want to reiterate it before I go. I would love a bounce and a break and a test of 6730. I would love it. That's what I want to happen. I want this to be a double bottom. But in good conscience, I cannot leave without telling you there's a high statistical likelihood we hit 6,680.70, the downside gap fill to the high from yesterday. It's not a guarantee. Of course, we could double bottom and rip, and that's what I hope happens. But inherently, it means what I'm hoping to happen is statistically rare. So it's against my play. It's against my dreams and my visions of grandeur. But you should know that this is a very high odds play. And unfortunately, the way the market is shaping up, it looks like it wants to play it and play it bad. But I would argue it becomes interesting if we could take out this recent high, 6,706, this recent spike right there. Then I'm watching this downsloping trend line, and then I'm just watching the various hits like the 1032, the 1024, and obviously the intraday high at 1010. But that does not matter because clearly we went from a choppy, fucked up thing, microphone, higher highs, lower lows, then higher highs and higher lows, clearly bullish. And then that started to change its tune at 1039 when we got lower highs and lower lows confirmed. That the confirmation was right here, 1038, 1039. Ever since then, we still have lower highs and lower lows. By definition, on the 1 minute chart, this is a bearish trend. on the 1 minute. That is undeniable that this is a bearish trend on this particular chart. It is what it is. And now we have to just fucking wait and just, I guess, slog through this bullshit. Fuck, dude. Why couldn't we have just tapped this at 9:45? It's going to make whatever. If you're day trading. But just from a swing trade perspective, the fact that we just now have to burn an entire additional day of theta for this is going to piss me off. What the fuck was that about? All right, that is it. Well, here's to hoping we bounce. Pay attention to maybe the bounce off of 6,700. Pay attention to maybe the bounce of the downside gap fill. The downside gap fill only exists on the S&P 500 right now. It does not exist on the NASDAQ. The NASDAQ did fill its downside gap fill early this morning. So maybe a bounce here. More likely, we're going to be talking about the downside gap fill. And then after that, your guess is as good as mine. But I could just tell you, ever since 1010, the delta is getting beat up like no other. So for this to have a shot at a recovery and testing that 6730 level, the delta needs to not just improve a little bit, but like dramatically improve. And please just be on your toes for any random developments from Trump. Watch Truth Social, pay attention to your favorite news on Twitter, set those alerts, because as we could see yesterday, in a moment, like just crazy things can happen and you have to be mindful of that. Anyway, that's what I have for you. I'll catch you guys later. Best of luck. Peace.